And all right, guys. So what I'm going to do is before we fully get into this, I'm going to share a screen and we'll just have a little bit of a look at the market and sort of giving you a little bit of a heads up what we're in for. So no XO charts. The guys who are doing XO chart stuff, they know how weaponry it is to add to something like this. But for you guys who are just using TradingView, you're going to love it because you can stay with inside TradingView, no extra plugins or software, anything like that. Um, be talking about this indicator I've got from Mikazwa, one of the members who I've been working with him to build out to automate the process of what you're going to learn tonight. But I'm not going to jump in the gun too quick on talking about that because I've got slides and we can talk about it when we get to it. But what I do want to just have a look at looking at this market here, and anything I say that goes over your head, you should know what you're looking at here by the end of the session. Okay. Essentially, what we're doing at the moment, though, looking at the current Bitcoin price action, is we are bouncing between 3 points of control. So that's this. I'll zoom out in a sec, but take my word for it. 3 decently sized large points of control that's holding the market up, and this anchored vwap, which we'll be talking about as well, that's come down, and you can see it's been suppressing price, and this is why we're right at that point of squeeze. That's why you get all these wicks and here and here. So if we were to, for instance, turn off, what do I want to? I want to turn off the indicators, right? Actually, I want to turn it all off. Let's go hide all. If you were to look at this chart, load it up, you'll have a lot of people being like, today, for low time frame traders, going, oh, today's been choppy. Look at this. This is shit price action. Look how choppy this is. But when you know what you're looking at, there's all the reason in the world for these points of control and this anchored VWAP, and just these 2 factors alone, you can expect this kind of thing until we get a strong push higher or a breakdown lower from this point in here. So this is going to be the kind of stuff that, we'll talk about adding the LTVW on top. I mean, if I just chuck it on there at the moment, it starts making things look messy. This is why I don't mind, like, for instance, if you've got it turned on, go to the eye and just toggle it on and off for a quick glance. Don't leave it on too much because then it starts becoming a bit of a fucking disco. It's already a bit of a disco at the moment. It's a little messy for me, but I can deal with it. My brain can deal with it. So, for instance, if we go back to the daily, and this is where I can highlight what I'm looking at here, we're going to be covering volume profile as well. The major volume profile that I actually have on here is basically from this sell-off point. So we encapsulate the range all the way through to the developing current price action. And then after it sold off through here and dropped below. So at the time, let me just show you something. If I turn the extend right off to where I was talking about, this was the old range before we dropped through it. Yeah. This was the old range in here. So you can see either. This is where with volume profile, I'm going to teach you how to use it, but you've got to get a bit creative. This is a part of analyzing. You're not just going to go, where do I draw from? Okay, I got to draw it from there. And that's just always how you're going to draw it. It's not going to be like that. What you're going to be doing is you're going to be getting creative, checking how it fits, seeing where things are and are not working, where they're being supported here, here, here. So as that was developing, let's say you're over here, you can go, no, I think the pull from here at the current time it was over here somewhere is going well. And then once you drop under here, you can go, hang on, I'm going to stop it here because I want to see how we react if this was a price action range of reclaiming it and moving higher again. So same, but different. I've got that level there, which is the value area low of this old range we can see being held down. But at the moment, I just want to extend right. I'm aware of it. And it's confluent pretty much with this value area high. So I've gone here. Then we're building out this greater B-shaped profile for my order flow traders in here. And as we know with a V-shaped profile, if we can get above it, then this a lot of the trap liquidity in here, or the offside liquidity, then starts to push up and we can move back towards this point and ideally this monthly level, which we're going to be talking about. So I'm going to be putting a few things together, but zooming back into what I was saying before about the points of control, we've got that, greater range, point of control, and what do we say about VWAPs and points of control? Don't diddle in the middle. There's nuance around when you can and can't, which as you guys get more advanced, we can discuss. But for now, we can treat this like a diddle in the middle. And that is why we were just talking about how choppy the price action is, because it's around a point of control. So when it's around a large point of control with a lot of volume, which is obviously accumulating and accumulating and accumulating, the point of control still remains where it is. We can look at this more localized range in here, which is a pull from from this candle here. And obviously that's sort of where it broke off from there. and it's moved all the way to the right as well. And that point of control is also confluent with this point of control. And then even though I just said that this, if you just ignore and just have this, we can see it's creating this B-shaped profile. So my XO chart traders, they love to see a B shape in the low. So if you can see a B shape in the low, and we get a new candle or a new value that opens up here, then we're looking really good for anything that dips down to this point of control can take off. And that can happen in seconds on XO charts, on a Trev chart or something. Same thing, but different. Just this is a larger, slower moving things on a daily. We could get up to here, come all the way back down here for 2 weeks. However long it wants to take, it's going to do. The market's going to do what it's going to do. We don't fight the market. We literally just we just need to accept that it's going to do what it's going to do. We just prepared with all these levels. So with the major points of control, and I'm just going to step back and put on this more local one, which is making a P-shaped profile. And how I did that one, I've just gone from the absolute low, again, extending to the right. So this is bounding price in here and holding it down here. So you can see everything is just condensing into this tight point. So at the moment, if you want to see higher, we need to get above this anchored VWAP. If we want to remain sideways, we need to keep getting solid bounces off here, or this green one, which we'll discuss as well, which I pulled from here, where we were in balance down. We've reclaimed it, so we don't really want to lose the green one. And the green one's quite confluent with the bottom value area low of this P-shaped profile. So this is an area which I was chatting with some of the fellas the other night. We got in right down off here because I'm aware of all of this. So when you're aware of it, we get a good narrative read. We can go, this is a point that needs to hold. This is the value area low. Auction market through from the course. Responsive bidding underneath. Above, responsive selling. So you want to be a responsive buyer, and if we're wrong, it's fine because it's got easy invalidations, really tight invalidations. So I thought I'll get this out of my system just to talk about the market, the state of the market, why the market's currently doing what it's doing, while we're getting all of these wicks. We can go down to the 1 hour and we said I'm talking about holding these 3 points of control that are pretty much all confluent, and we need to get above this anchored VWAP if we want to be able to progress higher. And we're starting to look pretty bad. We're losing the monthly open and that green VWAP from there. And this has had a few taps down here now. So it's going to look pretty gross if we start getting down in here. But for the benefit of the doubt, obviously around these points of control, we can really give it a big swing points off it, right? So at the same time, even if this did want to come back down into here, go again, it can still be very magnetic to these POCs within this range, especially the larger point of controls, like large value areas. They will more likely chop over it. Whereas if you had a smaller range with a lower time frame, you'd expect it to be closer to it. So a little bit of advanced stuff that I'm, again, bringing in that I want to elevate all of you up to. But for now, we've got some slides to get through. Any questions on what I just said? I'm probably going to cover it in the slides, but any specific thing jumping out that you really want to ask right now? Because I won't be able to concentrate on the slides. Awesome. If no one's saying anything, that's a good thing. All right, so let's get into these slides here. Alrighty, so tonight we're covering identifying high time frame levels. Ideally, we're just going to stick, and I want you guys, while learning this, please, to stick with monthly, weekly, daily, okay? And another lesson, because I've micronized all this down to really, really lower time frames, at the end of this, we can potentially just fluff around and have a look at what that looks like. But while learning this, this is not going to be like learning XO charts or TPO. This is some really, really simple yet powerful stuff that's going to glue together a lot of the stuff you've learned from the course and a lot of the stuff that I've spent time with you guys over, the past year of Wealth Club. Okay, so let's bring it all together. Using volume profile to qualify areas to do business, so to monitor strength. So that's where these are going to be your main levels and zones, your triggers essentially. But when you have heaps of monthlies, heaps of weeklies, heaps of dailies, which one do I use? That's where this comes in and basically says, aha, it's a value area low near that weekly. And that means responsive buying and a weekly level. I think I should probably start to look to bid around those two factors. And that's just two simple things that you're going to learn to do. And you're just going to wait for it. You can set an alert up. And we all know how to set alerts, right? You can literally right-click anywhere on the chart and set an alert. Right, go in there and click set alert. And that'll send a message to your phone. If you've got TradingView on your phone, set up for text messages, etc. Go live your life. Oh, I've got an alert. Sorry, guys. Got to jump on the computer for the next 15, 30 minutes or so. I've got to have a little bit of a look. There's a potential opportunity. If you're a trader who's using really wide stops, It could just be a matter of even setting a limit order around these areas. Stop below, a couple of percent away if you're using really small margin, obviously. And that'll even do wonders for you as well if you are a busy person who doesn't have that time. And finally, as I was just discussing as well, we're going to look at the anchored VWAPs. LTVW I've added in there, but we're more looking because, we haven't talked about this much, the anchored VWAPs, okay? So with the volume profile, we're going to be talking about just general daily profiles, but then we're going to talk about what I was doing before, how to make it fixed from a point, and it can stay fixed within a point of price action, or it can remain extending anchored to the last candle, so we can continue to watch the progression of the perceived value on the market, where the point of control is moving, if it's moving higher or lower, can give us a little bit of observational insight as well, which we'll discuss in here. And the anchored VWAPs, which is just, like I've always said about developing things, I don't use these to execute off. I use these as a gauge of strength. Pressure down, pressure up, no pressure but sideways movement. That's all these sort of things do. And that's what I was just going through in here saying, hey guys, like I'm not taking any trades off here, but if we're above it, hang on, now we're above it. We failed it here and we failed it here, but now we're actually getting some time and space above this area. So I'm going to look for other reasons if I wasn't in the market. So for instance, this daily level, would expect a rejection from it. But let's say we got above it and we retested it with that time and space. Then I might look for a B-shaped profile and become a buyer off that level. And I can join the move because I know that the imbalance down point has now become an imbalance up point. So everything's pointing up. Okay. So again, these sort of anchored VWAPs, developing values and stuff, they're not like I'm going to take a direct trade off it. Another thing I just want to show as well, just quickly, is I'm going to go back here and I'm going to add the LTVW, get ready for it to be a little messy. But we know that if we go back to other times in history, even though this is going to make me look like an idiot, it was a trade to take off the developing value area low, but a lot of the times you'll see just how messy it gets through it. And if you are a low time frame trader, you know how unideal this is. But at this point, when you get an inside break, time and space, it can move to the opposite end of value, at least to points of control or VWAP. So again, what do we have at the moment? What's just an observation that helps my narrative? Well, there's a little inside break happening in here. So we could potentially move higher. If this wasn't here, I would have less of a thesis, less of a hypothesis that this thing could lift if this was in no man's land. Or if this area through here was looking more like this, then I might be more inclined to say, just from the imbalanced down state, I believe it's more likely to go down. But because we're trying to balance, a balance state for me in this situation is coming from a deep discount underneath a developing yearly value, meaning we're in a discount of the perceived, this is the kind of developing yearly VWAPs, the yearly perceived value from the start of the year. And we're all the way down here. So at any point of time, going back to here to question, even if it does roll over after that, is still a wicked trade. Got the guys in down here. We've been in and out because below time frame traders. So I'm not going to lie and say I'm still holding this one. But let's say it does go up there. We're looking at a 14% move, guys. So it's plenty to trade with and as an intraday trader and that sort of thing. So let's jump back to the slides before I chew up the night and haven't even started them. But hopefully you can get a little bit of an idea based off this. And hopefully at the end of the session, something like this won't be too foreign to understand. All right, so let's get into it. So levels, market, alert, wait for it. That is that simple when it comes to this stuff in this sort of two-dimensional way. We're going to look at this. I just wanted to start quickly. I want to have a quick ramble, okay? You can read this stuff, but I'll go through it. So this somewhat simple strategy is designed to be a contrarian trader beyond a higher time frame level, where once passed through the level, we use lower timeframes and other forms of analysis to get good entries, anticipating the high timeframe level we are trading under will be reclaimed. Okay, so we're looking for a level. We want to find the trade under it. Traditionally, there'll be support and resistance. You go, I'm going against resistance. Sort of now you get more advanced, take that away. We're actually finding the opportunity that becomes a wick on the higher time frame that reclaims the level, okay? Looking at the fixed range volume profile, which is the FRVP specifically, we're able to have higher and lower time frame ranges to look for deep discount. POC bounces, etc., to take advantage of low time frame areas to take advantage of this spectrum of opportunity. This document will outline the simple concepts. However, this is an add-on for greater understanding of the MM3 concepts and market mastery wealth club taught. So some prior knowledge to fully understanding things like the low time frame execution. For those who use the trend reversal charts, or you've got a bit of a knack to SMC, it will be helpful. This isn't just going to like transform your trading. There's a few prerequisites and a bit of prior knowledge that will actually you'll need to make better informed trading decisions. If you're lacking this understanding, I'd recommend further study before dropping to lower time frames to execute towards a level. That could now become a resistance point, a breaker level, which we'll talk about as well. This does not mean you cannot still trade a conservative approach as to waiting for a higher time frame to reclaim the level, or a value area or volume profile to take a safer trade. But of course, will just require less margin to the account for a wider stop loss due to higher entry. So like I said to you guys before, some of you guys may have a very, very large account. You don't really need to go to low time frames. Maybe 4 hours the lowest you need to go, and you're happy with having a stop loss as wide as 2 or 3%. And the kind of margin that you can account to lose for could be yielding incredibly large gains if you are correct. So you're kind of happy with that more relaxed approach. The more money you have, the easier it is to trade. Obviously, the less money you have, the more people start upping the leverage, upping the margin, taking higher risk, taking more trades, and they end up 99% of people, which is 99% of people, burn themselves. I wanted to highlight there is a major misconception to low time frame trading, being that it is for scalping. And although theoretically, if a trader does have a well-rounded grasp on all time frames, it does not mean any given day one could just load up a low time frame chart like a 5-minute and be making money on micro moves. It's just, take it from me, 9 years in, yes, I can scalp. There is days I completely and utterly just shit the bed. Okay, so I'm now getting better myself at being able to go, look at this, look at this, look at this, look at this. Oh, wow, it's actually a scalping day today. Most of the time it's not, okay? At best, it's an intraday kind of a day, you know? So as I was saying, it's sort of 9 years experience saying that. I'll not give several examples of what to look for in this document, but potentially in a future presentation, I can explain the advanced requirements for such a day. So we can talk about scalping in the future and the kind of things or several scenarios I will look for from the start of the week into a certain morning, and then I can go, yes, 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 it's a scalping day, but it requires a lot of pre-criteria for such a day to exist, or a black swan event where it's really big rotations, like a stock exchange is dumping, and then it becomes quite easy to take advantage of something like that. Surprisingly, in a training environment, scalp training is very easy to do as well, but very, very rare as black swans are. So I want you to understand that your low time frame skill and ability is for execution only, guys. So we're not trying to be scalpers, and those who are trying to be scalpers, give it time. But what I'm saying is, just because you may hear low time frame is for scalping doesn't necessarily mean like you have to be a scalper. Okay, so what does that mean? This means the majority of your observing ideally would be spent watching charts at the 4-hour window and ideally above. It is only when a condition is met, which we'll cover in this presentation, should we be dropping below a 4-hour to then look to execute, as the higher time frame observational analysis is then telling us we're in a zone for opportunity, and the lower time frames will be used to find that specific trade that will ideally spool back through the level. So if we have, just quickly to explain this, say we have a level and it's a daily level, okay, and you're looking at the 4-hour, and we got a 4-hour candle, another 4-hour candle, another the 4-hour candle went in there. It is only here, it is only now under this level that we can drop from the 4-hour and work our way to the 1, to the 30, to the 15, to the 5, etc. Because we're trying to find the entry here, because the higher time frame we're expecting this to happen. Okay, so what I'm trying to say is we're not always, don't take it that, oh, I don't want to do all of the stuff Romstars or all the stuff, you know, Liam and Zaki and Reese and stuff are doing just because I don't want to be a scalper. You're shooting yourself in the foot. Having that kind of skill on the lower time frame is not to go down on the 5-minute, start on the 5-minute each day. It's actually, in fact, to have a high time frame that zooms in and zooms in and zooms in and zooms in, and you finally get to a point where you're looking at, you know, it doesn't again have to be order flow. It could be a unicorn set up in SMC. You've got a breaker block, an FVG, an order block. It's pushed through, it's come down, it's bouncing really cleanly off that breaker block. There's your entry, and it's on a 5-minute candle. and that's, you know, 1,000, you know, say $400-500 or whatever below the daily level, blink and you miss it, you're back above the daily level, you breathe out and go, hell yes, off we go. And you spend the next week going up. So that's what the low time frame stuff is really used for. It's a lot of work to understand it, but for those who want to make money and get in at really low, it's useful. And some people will say, well, why? And just quickly again, I'm sure I'm going to cover this several times, but the reason for it, okay, is because when your stop loss has to be 1% away, okay, a full 1%, then your margin is decreased for that 1% loss. But if you're getting in right at a bee's dick off the low in that 1% loss, guess what happens to your margin? Your margin gets to be 10x, 100x. You get to put on a larger amount and still lose the same if you got in higher with less margin, because at the end of the day, 1% loss, 1% loss. You're zoomed in, you get that 1% loss. So what happens when you are correct is all of a sudden your 3R trade is a 300R trade or a 3000R trade, just because you've taken the time to really understand the lower time frame and know when to use it and when to know to spend 90% of your time above the 4-hour chart waiting on that level or waiting for that alert to go off. Okay, so this again, you guys can just read this, but in this final pre-note, I will stress one more time about the importance of understanding narrative and spending majority of your time on charts, distinguishing the difference of expectation versus discrepancy. Expectation allows us to take trades between two expected points. This knowledge of expectation allows us to see a shift of condition, a moment of surprise where the market is weaker or stronger, a breakout, and from where we are able to shift our idea of what was happening and expected to a new expectation that is no longer a bound intraday trade, but potentially longer, so making a longer term swing in the new shift's direction. And again, just to keep this document simple, I'm going to be using up examples tonight, guys. I'm not going to be talking about down and up and confusing you guys, but just look at everything from an up way. All the levels will be up. Reverse it in your heads for the short side, for the sell side, okay? But just to keep it simple, two-dimensional, everything is talking about buying tonight, buying off a level, okay? One more thing I just want to talk about with this is when, say, we're inside of a range and you know that range, and it could be a volume profile, could have a point of control. We're expecting selling to happen here. We're expecting buying. We're expecting selling. We're expecting buying. It's never this neat and tidy. Sometimes it is. Most of the time it's not, because this one here might come down here. And this one here might fall short here. We're going to talk about how we can narrow that down and understand it. But this is expectation. We got a D-shaped profile. We expect to go this way until we die. Okay, that's it. We don't expect anything else. We're not expecting Bitcoin to go to, down to 45K or something. It might. Who knows? No one knows. We don't expect it to go to 100K overnight. It's all a meme. Okay, we expect it to go sideways. But when we know the price action, the volume, the levels, and all of a sudden a monthly level that should have rejected becomes support, we have a shift of condition and we expect it to start to spool off higher. We have an imbalanced VWAP at that point. That is when we know, okay, pump the brakes. For the last 3 weeks, I've been intraday trading, but all of a sudden, maybe I should join this move and let it breathe. Maybe my take profits don't need to be so aggressive. Maybe they can, what's the higher levels up? What's in the way? Maybe I'll take less on my take profits and really let this thing breathe, because I've now just seen a shift of condition. That's the one time you might start to size up, for example, within, risk appetite wise, 1, 2, instead of 1%, maybe a 2 or 3%, not financial advice. If you are wrong, however, and it falls back under here, then we know that becomes a failed auction and we expect it to go back to the point of control and back to the value area low. So there's another trade in there, and I'll use that trade to any losses that I incurred in here. I'll make my losses back and some more. So again, this is the exciting part about, there is so much emphasis on everyone learning how to enter a trade. That's fucking useless, guys. It's great. You all want to know how to enter the trade, but how do you enter a trade and sit back and go, fucking now what? Where am I taking profit? Should I take profit? What should I do? And then it round trips you, right? With understanding a narrative, you're excited because you have an alert. It comes down, it hits that, but because you've spent so much time not catching knives all the way down because you were waiting for this, you've had all the time in the world to go through all the high time frames, look at all the volume profiles, look at all these different metrics, and be like, okay, well, there's a monthly, that's a point of control from way back over here, 2024. Okay, so if I get into here, my major take most of it off will be at this level. Oh, but hang on, there's a solid new daily through here. Or let's take off 33% at that point as well, just in case it does this. So you start to do that even before you get into the trade. You already have these points and locations of if it does this, then this. So it's a really keeps you relaxed. You're not stressed. You're not, jumping on the computer and trying to get that entry. I'll just do for it to round trip on you anyway because you've planned it out. So let's move on and actually get into these levels. So we're going to be using this presentation to find the monthly levels and discuss the required nuance around them. In your own observational analysis, you will want to mark the weekly and daily levels too. So I'm just going to teach this on monthly, okay? We can go over it after, but what I do here, you'll just drop to a weekly, you'll drop to a daily, okay? That's all you're going to do. We're just going to start off with monthly levels. It's going to keep it clean. These are big fat candles. Really simple, not too confusing. So this is obviously not limited to just the big three. As you advance, you'll find, depending on the chart, that you can use the 6 month, the 1 year, for really, like Bitcoin, stocks and stuff, really, really old. And we'll be able to use them to observing zones and narratives as well. So what I will say is, as you get, this becomes just your normal routine, and it should be, is, try different time frames. Like I tried the 2-day on Bitcoin. It's shit. No one looks at it. But 1 day, everyone looks at. Everyone loves. 1 day's been really good to hit at the moment. Like literally every 1 day is given a good trade. Okay, it could change next month, but this is why we observe. This is why we watch. Okay, we might find the 6 month. It could put the an old 6 month level. I haven't looked. Could put the low in. We're waiting to hit it. So you can start getting a little bit experimental. But for now, monthly, weekly, daily, while you get used to this, okay? In execution, you may even be marking lower time frame levels to monitor strength and weakness below the higher time frame, as I said. So that's where, I want a daily, but I find a little 4 hour just a little bit lower, and I'm like, okay, I just want that 4 hour, and then it comes down and it bounces off that 4 hour. So the deviation exists under the daily, but it was the 4 hour oomph that you actually got the trade off. So having a look at the little lower time frame levels, or where they're all sort of confluent, and then you could look at it and go, oh, look, that's a breaker of a 4 hour, but it's got a fresh order block with an FVG. That's a breaker setup, with an imbalance. So it probably wants to grab the liquidity out of that. This is what I'm saying. Prior learning an MM3, you should be following me. If not, don't stress. But these are the kind of things that you're going into the level, but you're also aware of all this other stuff. But this other stuff happens everywhere. There's a billion breaker blocks, and there's billions of all these setups, and half of them don't ever fucking work for you. Now you know where to look for that setup. So it's relevant because there's a level. It's relevant because there's a volume profile with a value very low. So they're all stacking up, and it's like, if I get stopped out on this trade, I'm proud of it, because this is a trade that I believe should have taken off, and I'll do it every day of the week, because I know in 7 days I'm probably going to make money taking that same setup than the few times that it's wrong. And if we are wrong, what happens there, guys? Shift of condition. Oh, interesting. Okay, I'm going to reassess the situation, but because we're breaking out of something that should have bounced, we're potentially going to trend now. So then I can start looking at deploying a strategy to join that move, which is a little bit advanced as well. But anyway, we'll move on. So bottom line for now, monthly, weekly, daily, okay? So be on the chart required to find the level for that time period. This is step one. We're finding monthly, so I'm on Bitcoin, 1 month, 1 month chart. Look, I use Coinbase. Some of you use Binance. That's completely fine too. I like Coinbase. It's never done me wrong. And I find Coinbase loves to hit levels. And if it doesn't, it likes to bring the market back to them. So perps either do or don't hit them. But that's fine, and that's confusing. But Coinbase, it's good at hitting levels. So I use it as my topology over all my charting. Yeah, I'm a perp trader, but Coinbase is what I want to see hit levels. And then I do my order flow stuff for my perps to join in regardless of price. I just need to see Coinbase hit. We'll discuss conditions, so such as pending levels, naked, fresh, triggered, washed, and failed shortly. However, just early on, for any condition to be confirmed, it must be finalized on the time frame that the level was conceived on. Okay, so we're going to talk about this, but I'm just going to say yet again, like if you have a level, and say this is a monthly level, and it's come off 2 candles, which we're going to discuss, and then the next candle comes down and it goes into the level, and you get a great trade. This level isn't really in a change. Yes, it'll be washed, which we'll talk about, but this level isn't fully confirmed until this monthly candle closes. Okay, why? Because it's in a state of flux while it's developing. Like a developing value area, it can come all the way back up, look good, but then the monthly ends up closing down here. And in which case, I didn't go and title that a good triggered entry. I trigger that now as a breakout entry, which we'll talk about shortly as well. So always just in the back of your mind, yes, we've hit the level, but if on the lower time frame, and again, if I was just to use this example and say that, this red color is actually the 4 hour, under here, it might do this and go under a few times, we have to make that bigger. But you get what I mean. All I'm saying is this is interacting with the monthly level on the 4 hour chart, but until the monthly that swept through it is closed, it's not confirmed. And monthly traders generally aren't really going to, like, say if I'm a monthly trader, what I'd be looking at, and again, would be, we redraw this in with the two candles, would be, as a monthly trader, I want to see it come down, come back up, close. Now I'm looking to do business from this point on because it's confirmed that action. But for us guys, we're anticipating this, and then the monthly traders can go, all right, now we take off. Okay. So if it's confusing, we'll keep moving on. By the end of it, you can go over this a few times. You've got the recording, you've got the slides, and any of these little things, just trust me, go through this and we can head on. So on a monthly, we use the monthly to monitor for movement, closes to mark off conditions. So again, I'm just putting this in your head now. Monthly, weekly, daily. You want to see for the level to exist, the day must close, and then ideally for that time frame to accept what happened at that level, the same time frame needs to close. But as traders, we're anticipating and getting in early to take advantage of hoping that a monthly level will close green and we've got in on the low. Okay, so step 2. Now we're going to talk about defining the levels, guys. To keep this simple, we have zoomed in on the last several months of Bitcoin. So here we were, and I have zoomed in on this area here, okay, down here. So that's what we're going on. So let's dissect. So the candles we are currently marking are required to be finalized, okay? We can talk, I talk about this now. We can discuss further levels, monitoring open monthly level or a wash breaker level later. But for now, this means when you guys are picking and finding these levels, they need to be finalized, okay? So we have this monthly over here at the moment, and it's still in flux, okay? So we can't go drawing any level here. We can't go drawing any levels off it. The only thing you could do is the open level, which is where it opened, which we're not talking about right now. But all we're going to say is this isn't relevant. So don't go adding any levels that are currently, we need to see them closed, okay? So everything from the current candle on the time frame is workable. Everything on the current developing in flux needs to just do what it's doing, okay? So identifying, without nuance or confusion, we simply want to see where we had a down close candle, this candle here, okay, and it closed right here. Okay, here's your monthly, opened here, moves down. So this is really elementary, but I just want to be really clear with it. I know a few you will appreciate it. Some people will like, get the fuck on with it. So without nuance confusion, we simply want to see what we had. We had the down close and an unclosed candle 2 finalized. So this was then moving up, but we can't do anything with it at the time. But once it closes, candle 2 is now closed and the new candle's open, our level has now appeared. So 2 finalized candles, and how it's worked is it's closed against the grain of this candle. Okay, so if 2 close red, there's no level. All right, guys, just continuation. Okay, so when this candle closed and this was red, this is nothing. There's nothing in here. Okay, but for instance, when this one here closed and this one closed green here, that became a level, which we're going to discuss as well. Okay, so hopefully I haven't lost you, but here we go. So the yellow line is showing us where June closed, July open, and closed higher than the open of July. Okay, so again, July opens, we close higher than July, winner chicken dinner. This is our level to now mark and stalk for future potential interaction. Note, we use the candle open, not the wicks on the strategy, guys. So makes you feel any better, instead of once having something that's sort of like, oh, I don't know, I use the wicks, I use the bodies. This is just bodies, okay? Because we want to look at that time frames finalized area of open and close and how well the bulls and bears are doing. And just remember, every wick you see on this chart is candles on lower time frames. So it's lower time frame traders essentially, and the real sort of mass of movement done by the monthly traders is done in between these areas, and this is all just low time frame fluff. So your weekly will be higher, your dailies will be higher, etc. You'll see more candles as we expand down. So again, super simple. Stick to the bodies with this, no wicks. So marking using the horizontal ray tool, I mark the level from the open, not the wick again. So we're just marking it from that low. I color scheme my level, so I use purple with an annotated monthly on it to keep easily to be able to know what level represents what time frame and weight. So if I am down the 1 hour, I don't have this random level with no title on it, and I have no idea what that means with all the 50 other levels. It's purple, it's monthly. And then after with the monthly, I can start adding extra little annotations to the end of it if it's been interacted with or broken or something like that. So identifying, this is now our monthly support, and we will watch how and if it gets future interactions. First nuance is to add this, is classified as a naked fresh level, okay? So we've got the level that was formed at the start of the month, 1st of August, nice fresh level that's come in here at the moment. So this is extended through time. And now this level has not been touched since it was formed, therefore naked, okay? If this candle comes down, as soon as it touches into it, it's no longer naked. And essentially what I'll also say is once it sort of moves back up and gets the close, then I'll say it's washed. It's a washed level, okay? So naked goes through, and we talk about that as well, and then it's washed. So a fresh, yeah, and it's fresh because it was the most recent. And yeah, so I also call this fresh. You guys hear me go fresh. What does he mean by fresh? I normally just mean fresh as in it's not stale. So it's a new loaf of bread compared to an old one. So this is like our freshest monthly level. So it's our most recent close. So if it's on a daily, I might have 3 or 4 dailies, but what's your freshest one? It was probably the last time price moved away from it. That's a fresh nightly level. And the reason I say that is you guys all like who have followed me along the trading journey, when I talk about recency versus duration and stuff like that, things that are fresh in people's mind, fresh in people's emotions. They're freshly offside. They're freshly been liquidated. So that fresh levels seem, they're more close to the action, more close to the emotion. So they can be milestones in themselves with how they get interacted. Just a bit of a psychological thing. Not always 100% true, but something that I'm something that I personally work with and see happen a lot more. And obviously something that's fresh is going to be close to the price action anyway. Don't have to call it fresh, but just be aware of that's when you hear me say fresh naked, you're wondering what the fuck the fresh part is. So again, naked observation here. When a level is naked, the assumption is there is demand around it. This is due to its inability to continue lower, as well as potential regrettable selling and trap liquidity. Okay. It's also a self-fulfilling prophecy because I'm going to trade it. You guys are going to trade it. We're all going to trade it. And that's how it works. Okay. Those who know, they know and they win. Those who don't, well, they short down here. Okay. So what I mean by that is when this monthly came down through this area, we would have had a lot of people going, she's doomed. This is going to be a big red candle, right? Down here. But I'm going to sell. I'm going to short. But then it closes up here. People don't use stop losses, by the way, guys. So they go, oh shit, I'm out. Like either A, I'm out of the market and I've bucked up because I sold at 58,523 and we're all the way up around at the time of this. We're all the way up around 63,213. So they go, Jesus, I've lost out on like a piece of my bag. So if it comes back down and they're sweating bullets and it gets back down into here, they go, oh, got myself back in the market. So that steps in. And the second side as well is if there is any shorts left, on monthly, a lot of them might be liquidated, but besides the point, where there was shorting action, people like me step in to see where the shorts were and we buy anyway. But if there are still, some people have used really, really small margin, 1x shorts and stuff like that, or large accounts where, it could still be a significant amount, but their liquidation's not till 300,000. They might go, I've screwed up here. I thought it was going to go lower. And they might go, well, I'll get out up here if I'm wrong. I'll give it some space. But if it comes back down here, they can go, thank you, I'll get out. They get out at market. Market stop loss is a market buy. It also helps juicy this candle to push back up. So that's sort of the mechanics of how it all works. So to keep it simple, price turn at this point on a high time frame. So we'll monitor this zone as a deep discount. So it's a deep discount within the area. And we'll want to see price remain holding around here if the level gets swept. Okay. So, yeah, again, we have the price come down. It does what it's going to do, but we want to see, getting a close back above this level. So for execution, we'll set an alert at the level. So you're going to set an alert on the actual level. which on a monthly you probably could. On a daily or something, I might set a little bit higher, just in case you get the old ping and drive, which we've got a few of those lately. But essentially what I'd be doing is setting it in the area, and then I can go from, I'm not going to start on the monthly every day, but I'll be on the daily, and then I can go, oh, let's have a look at the 4, and so on, and work my way down. So we'll set the alert. If your playbook was to only wait and trade around these levels, once price hits this level, this would activate lower time frame analysis, so I just said, for better entries, and an analysis to see if strength is stepping back in for prices to bounce. So obviously we would see some structure and stuff bringing that price back up from that point. So triggered, washed, first tap is best, okay? So yeah, it's something I actually learned off a Wall Street trader, probably 4 years in trading, and he was explaining, I don't know, it was like value areas or something. And I looked at the area and I said to him, are you going to take a trade off that? And he said, nah, it's washed. And I was like, what do you mean? He goes, I only trade naked levels. And I was like, what does that mean? And he said, so when there's a fresh level and nothing's touched it before, I'll only take a trade off when it hits that level, washes that level for the first time. And any time after that, I'm not interested in touching it. Doesn't matter if it bounces. And I didn't understand it until I just ignored it almost. And then years later, I was like, okay, that clicked. It's just about keeping your strike rate high. Okay, so first tap is best. Okay, so like in the last example, price came down and tapped below the monthly level. This was naked until price touched into the level, now making it a washed level. Okay, so execution, if you're waiting for this level to like a trigger at the level, when price got to it, you may use lower time frames to find an entry or of other analysis. So it could be a Morningstar reversal, a fixed range profile, and a point of controls down there, or so there could be a fixed range profile in here, and a point of control at the time could have come through here. And this is where you are actually looking, to get it all. Actually, we're using this candle over here. So, at the same time, we have this level. It bounced pretty much off it, but on the lower time frames, there could have been a little value area, or there's like a little Morningstar reversal that goes in on a 30-minute or a 15-minute, and that's where that could be your trigger. So that's what we're sort of doing, looking into that, or using order flow software, Trev reversal, something like that. And as we discussed about the scalper knowledge, it's not just about scalping, but increasing the multiplier of R. So obviously being able to add more to the position size and losing the exact same amount if you're wrong. And I like that way as well, because if you're wrong, the band-aid gets ripped off. You're not waiting there for 3 days staring at charts, wasting your life, all to get stopped out. So for future analysis, this level is now washed and conservatively not a place to look for bounces. However, a place to keep an eye on, even though it can still bounce several times. It may be in your playbook to only take trades at untouched levels to keep your strike rate high, and be willing to step aside on a less probable washed area. Okay, so this is where the level was formed, right in here. We can see we closed here. This is what we're discussing. We came right down to this level. You lower time frame, you get your entry on it, and this thing took off to all-time high. Okay, so that's how powerful this is. Now, let's say hypothetically it did something up here and came back down to here. Do you think I'm going to become a buyer off here just with this by itself and this concept? No, I'm not, because it's already washed. It's already hit it. And from here, there is a higher chance of it just going straight through. It can bounce and do this over and over and over and then take off. I'm willing to miss out, but I'm not going to stop there. I'm going to look at other forms of analysis. It might actually be that this does bounce off here, and something up in here on a lower time frame allowed me to get a retest, and I got it in a little bit higher, but I just wasn't willing to be a part of the capitulation that can turn this into what we'll talk about after, which is a breaker level. Okay, so tip, first touch is best. When naked, we anticipate a reaction, also known as a trigger. So I'll say, hey, my trigger's arrived. So you get a trigger alert on your phone. Time to go in, and I've spent hours looking and observing, but now I'm in executional. So I know straight to go to all my executional toys and play with them and get a good trade. We get in the counter the move, and we can relax once the time frame, the level was mode closed back on. In this case, wick in and close strong in our intended direction. We can comfortably watch price reject or press high with stop at break even, and potentially take profits, locking in, increasing your account size. So let me go over that again. So what I'm saying here is you come down, and we're in a state of flux until it closes here. Once it closes there, we know we've got now the monthly level on our side. They're going, hell yes. We've just taken, we're still not quite through here, but such a strong reaction off this level through here. From this point on, I really go, now I've got the monthly boys on my side, and they take monthly boys and girls. But the thing is though, right, is because you're getting in so low, Okay, so let's say you got in here. Hypothetically, you're probably looking at your break even here, and you're all the way up here. And hell, like maybe there was a through there, you actually took a bit off. You took 33% off there, and you're cheering, right? That's a big move on a monthly. But you keep your break even stop loss down here, and you just go live your life. And then you check the next month, and you're like, oh hell yeah, this thing is absolutely booting up through here. But if it did come back down, don't cry because you've got 33% of the trade out, and this is all accounted for at this point. Okay, so just a different way of trading. You're going to have to put money on the table and leave money on the table to make money. Scared money don't make money. Okay. So what I'll do is if I, take a bit out up off this, old monthly level that was holding price down due to all the wicks, I might say from there, okay, I had a really good trade. I'll take some off. By this point, I'll probably move my stop to break even, meaning, anytime overnight it can come back down, and this is like a free lunch essentially. But if I were to go, oh yeah, but if I move my stop loss like up here, and then I get taken out, and then it does this, I can't stand it. But you needed to leave the risk in here to be able to account for how big this wick was going to be, and then take off. And surprise, surprise, it was actually we go over this in volume profile after. There's a point of control right here. So it was an unorthodox entry that I don't teach two-dimensionally, but three-dimensionally when we actually have all the reasoning. Point of control can sometimes be the final kiss that pushes prices higher. So yeah, and that's what I'm talking about with that last little bit of the slide. So wash tip, when a level has been washed but still potentially a relevant demand point or rejection point, we don't yet want to clear on the chart, so we don't want to delete it. Change it to a neutral color or pastel or gray, whatever you want to do. Something that reminds you it's been washed. So I normally use these sort of these main colors. We've got the indicator coming and doing all of this now, but I use these main colors up through here as sort of my solid color palette. Like that's a naked level, but then I'll drop down to these pastels once they've gone through. And that just means like if something's been, washed out, it's lost its color. So you can see this monthly's not as vibrant and purple. It's more of a light purple. So for me, that's just a way of being like, okay, there was a monthly there, but it's been washed, or it's either been interacted. You can do the same if it's just swept it already and it's closed. You go, I don't want to use that again. I'm going to wash it. But in this case, turn breaker, which we're about to talk about, but it's now a wash level. All right. So failed breaker. So this is where we were talking earlier on when we first started the session. We're discussing about how there's a monthly level down here, and we can draw that off to the side like so over here. But this was also at a time of a monthly level. So if you take all of that out of your mind, at one point or another, there was a really good trade entry here. We had a fair value gap up through here, so obviously you took profit, play right off it, or in here. Well done. But obviously, this is what I said before about first touch is best. First touch, oh, but I'm going to bid it again. Oh, look, boof, dumps. So that's why that rule applies to me in all situations, that I don't take a trade off at the second time. I discovered something trading this week. I think I do mention it, which is if the weekend hits it, I don't wash it. I wait for Monday to hit it because I just don't trust weekends. Not at the moment where we're rotational. But that's conversation for later. At the moment, if we go through this, observing on March the 1st, we confirmed a naked level. So that's in here. We swept the level, now washed. So we swept it here during April. We had a solid trade up. Then on June, which is candle 3. So April, May did its consolidation. Then on June, we busted straight down through the level. Dropped monthly level aggressively with an imbalance. So we put the FV in through here as well. So we've got that really solid imbalance. Obviously, that didn't exist till this candle close. We had that really clear displacement that came down. And what should have been demand is now flipped supply due to those bidding the level 3. So those who don't know first touch is best, they're just going to keep trying to bid this level because that is one of these wicks. They just want another wick. And they could have been right, but they weren't. Okay. And because you live by that rule, you didn't get hurt. You didn't get burnt. You let it go through it. You didn't join the short or anything. Maybe you had reason up here to get in one, and maybe from there you're like, hey, I'm actually not going to take profit here. I reckon this thing's going to dump, and you won out even better from this low down through here. So this is how the thinking starts to roll through, understanding this sort of a simple way of dissecting the market. So, and then what ends up happening on 4 is during the bidders in June that were bidding really, really strong through here, because it moves so quickly, remember people don't use stop losses, it goes down. So what do they want to do when it comes back up to this monthly level? They want to get out. And it actually it's slightly, this is quite fresh. It's actually, if you zoom in, I can't do it on here, I can do it on a chart, but actually didn't quite hit it. And Coinbase likes to hit levels, so kind of feel like it might want to come up and give it another go. Just based off that as an observation. It's not fact, but inside breaker developing yearly value, front run the monthly breaker block, fuck, I don't know. Like, but then I've got other reason later on to tell you why I don't think we've gone lower. So you can see how I'm in my mind, I'm juggling constantly higher time frame hypothesis, and I'm just trying to work to go, well, I could take trades every day because I'm trying to work out which one's more likely to happen, and then I can lean heavier into that one. So the execution, if your playbook was not to trade at wash level, you did not get harm bidding when price came back down and went through the wash level. With this knowledge, a sell at the wash level 4 would have been a successful close under. So if you took a long down here, you know to close around here. If you had, and for those who have been following me as well, depending on the level, I will generally always front run it. Okay, so I don't know what the distance is in there, but I'll front run intraday trades by 10, 20, 30, $50. I'll use volume profile to look at nodes as well and try and hide my take profit prior to where it gets thick. And if it's a monthly level, I might even go back $200 lower. So if I would be like, oh, I woke up the next day, oh, I got out, but geez, it didn't quite hit it. Thank God I wasn't one of those people who's OCD and puts my take profit identical to the actual level. And seeing as I use Bybit anyway, if I'm using Coinbase for levels, I need to give it some. I need to adjust a little bit. Perps generally shoot further than spot, not always. Spot's in a premium, it can push a little bit harder. But generally I will just front run it. And just while I discuss this, before I do forget, it's just something I want to bring up, a few little Easter eggs and stuff. I just want to jump out here and let's just move over. Say we have a level that I'm interested in buying off, and let's say I have a level that I'm interested in selling. Okay, so what I'll generally do is say there's, two levels. So, we could just hypothetically say this is like a previous monthly value area high, and up through here it could be squiggly, but it could be a developing weekly value area low or something. Okay, then down the bottom again, what we'd have is we have a similar situation. We could say that's the previous monthly value area low. And then we could say, this is a point of control, or a naked NPOC, or maybe not NPOCs always go for them, so it's a bit silly. But a naked like a not a point of control, but maybe even if you wanted to say like that's a monthly level here and that's a weekly level. Do you get the idea? Okay. Well, here's what I'm going to say. If I want to take a buy position, I'm generally always going to aim for the lowest level. Okay, that's where I'm going to be looking. I'm willing to be wrong on this and it to bounce up here and do some funny business, or even up here, do some funny business and getting a little bit higher and not getting down at this point. Okay, because I want that maximum amount. Why? Because if I get in here, I have a higher chance of being mousetrapped, and then I've lost all my fees here. So it's easier to go for the most extreme. Okay, now I do the opposite at take profits. These are the two levels. Remember that situation. If I came up and this seemed like the go, I'm taking profit here. Okay. If it does this, then you go, I might short it. But if I was going to short, I'm going to do this level, like down here. I'm going to do the furthest level away. And if it doesn't get to that point, and I am correct, and it just rolls over from here, puts a bit of an FVG in, then I'll look at taking a short from that position. So why am I doing that? Because in this scenario, I'm stopping myself from getting mousetrapped. I'm stopping myself from catching knives, and I'm going for the most extreme point. Okay. If it doesn't even support these levels and go straight through, then I only got damaged once. And then I get my shift of, we're going lower. Okay. Whereas in this case, and this is so many years, I aim for this level and it will literally hit this level and come all the way back down and stop me. Okay. So in that case, I'm being generous on my take profit, just getting out. And this is the same thing, the couple $100 difference or whatever. And I might have, in this case, I'd probably even set my TP here. But for this, I'm the guy who really wants to see it stretch down. And there's another little level down here. I want to see it get down to there and push into that first. Otherwise, I'll see it bounce here and then I might get in if it does hit that level. I'm always just giving myself the best opportunity to get in at the lowest point, which should be the ultimate bounce point, not just fluffing around here where New York then comes down and then goes, and vice versa. I'm being very generous to get out of the market and step aside so it doesn't come down here or there's a VWAP and it comes and chews down through here and I'm paying funding and then it comes up and I paid more in funding without actually getting to that level. I could have just got out there and probably made the same. So a little bit of food for thought just with how trade management works of when you're looking to get in, go to the extremity. When you're looking to get out, front run the and you will find this a lot. You'll find that there's levels stacked very close to each other. This is where, like, again, entries, I'm looking for the furthest point, the liquidation point. For the take profits, I'm being generous to the market and just getting out. And for a 3% trade, I don't give a shit about the 0.04 or the 0.004. You know, I don't care about that little increment. It's nothing. It's ego at that point. Does that make sense, guys? What I'm sort of saying here? Liam's nodding. A few of you not. Rewatch this. We'll get back into those slides, but yeah, just something that I've been I'm doing a lot more trading and getting a lot higher strike rate and a lot more success because I just sort of woke up and was like, hang on, what am I doing? This is ego trading, right? You just got to make money here. Yep.
So like that, what you just talked about, it's like a perfect sort of example of if we've got like a naked, fresh daily level and like a volume profile, value area low or something together.
Yep.
But I don't know if you're going to get into this. So if you are, just let me know. Talking about these naked daily levels, if there's one of those, do we look to take a trade from one of them, you know, or are we looking at it with the volume profile and going, okay, this one aligns with the point of control, this one aligns with the value area low, therefore I'm going to take a trade off that. Like,
yeah,
I'm not saying would you only take a trade off a daily or weekly level?
I know. Yes.
Volume profile, how
correct.
they interact.
Yeah. So essentially, it's a great question. Everything's about confluence, right? And if I was, and we can all go back just to the PD range as well, right? So say we had, you know, our PD range, and we use this hypothetically, and then say, you know, if you've got, for instance, let's say you've got a daily level that runs here. This is just like a watered down version of what we're talking about, right? Actually, I can just put daily turn this on as a fake daily level. So if we have a daily level here, or we had a daily level here, which would be the better level to take to trade for a long?
For a long,
this one, right? Just because you've got more criteria setting, whereas this one here, it still might be the thing that breaks us out, but we are risking being higher in a premium at that point. So the next thing on top of that would be, from there, would be, let's just say hypothetically though, you know, then we did actually have, you know, a volume profile, and it looks something like this down through here. And then we also had, you know, or it would be a bit higher than that. Probably drew that a bit retarded, but say we had the point of control running through here, then that level's turbocharged as well.
Yeah.
Assuming that, you know, prices come up and done this, and the daily level was formed here, then we've got the point of control back here, the magnet, where most volume was trading, where institutions want to defend, price comes down. And that literally happened the other day. We had an NPOC on a daily, and it smacked off it like a reaction trade. It was like, boff, like that. And I took it. And that wasn't one us guys did. That was a different one I did the other day when I was first playing with all these old school levels. And I was like, holy shit, this stuff is awesome. Had not just an NPOC, which an NPOC on its own, as you guys would know who use, you know, like order flow and TPO and even volume profile for you guys who have got old fixed range profiles, which we're going to go into, and there's an NPOC that you can extend out through time. It's one thing just to have that, but then if you add like a daily or a weekly and they like line right up together, then that's almost like, pack it up. Let's stop wasting money. Let's just set an alert and wait for that level. And if it doesn't hit it, so be it. I'll talk to you next week and we're going to be stalking a different level when that one does. Okay, so does that sort of answer your question?
Yeah, it does. So like, sure. you can take a trade with just a daily, weekly, but
You
an
can,
A-frame
but
setup is
and
the
this is it,
competition.
Liam. This is it. Like if everyone, your playbooks and your um, how conservative you want to approach these markets is completely up to you. Take it from me, who went from a degen altcoin fucking 100xer who got wiped out several times when I was a kid, to where I am now, which is like I several times a week will look and see something that's mediocre, and it was the trade to take, and I don't go, I did for a long time. Oh, I should have taken that trade. I should have taken that trade, because what happens every time I find a mediocre trade after that, I get stopped out on, right? However, when I find what we're discussing, like this trade here, this one in here, and it did come down, I will hit that hard, okay? And if I'm wrong, I don't go, oh, what happened? That should have done so and so. I see I'm wrong and I get stopped. And then when it comes back up to it, well, I just make up for it for doing this,
Yeah.
because we understand the narrative. If such a high level trade fails, that in itself is a shift of condition, because we've been reading this market. We're reading it like a book for days and weeks, and we live it. And we sit on the computer every day or several times a week for those who are a bit time poor. But you have a good read of the market. That should be the trade to take. And it's not clear for 99% of people, but for those like you guys who invested your time with me to learn this stuff, you will learn, hey, like everyone comes together and that's the trade to take. Most of the time, it will be the trade to take and it will bounce. And I've also discussed with the fellas as well, is you'll have times where you have, for example, like we're talking now, say this is the trade to take. You still get the reaction. It still, it still moves a few $1,000s. You got in here, you're at break even, you took some off at the 50% or at a thin spot in here or something. You take some off because you've got reasons to. There's a place I'm not sure about this. We're rotational. I'm going to take 50% off. So you take 50% off, right? At this point, you move to break even, and then it comes down and washes out you anyway. But you made half the trade in that distance because you were smart. And even if you didn't take 50% off, right? Even if you didn't, you come down at break even. And guess what? Before you took that trade, your account size is exactly the same as it is after you get stopped out. So it was a free trade and it was a learning experience, and it had more skin in the game. And the best way that you guys can learn is having skin in the game. Now, when I say skin in the game, I've got a few of you legends in here already. I know you guys' net worth is quite impressive already in your lives, but you're taking this so seriously and you're so smart. You're just trading small amounts. So having skin in the game does not mean I want you to go and get half your net worth and go and put half of that margin on a trade, or to end up in tears and drinking out of a scotch bottle depressed. No, I want you guys to be smart and methodical, but I don't really agree with paper trading. I think it's useless. I just think when you paper trade, you're not getting the emotion, and the emotion is what we're trying to harness. And we've gone through that a few times. At the end of the day, obviously, this theory is not easy for you guys to learn. Okay, going to university, you can't become a surgeon overnight. It's going to take you like becoming a surgeon. It's going to take you guys time to actually learn all of the theory. It is hard, but for you guys, like anything, you go up to someone who's really, really good at playing the violin, and you say to them, oh, that looks hard. He's probably going to say, no, it's easy, right? Because you're going to get better at it. You're going to stay persistent. You're going to get better. But when it comes down to the absolute nuts and bolts and theory alone, even myself, even if I have all the narration, even if I have all the important stuff that I need to know what price is probably going to do next, and if it doesn't, then there's a shift or whatever, I still have moments where I fuck up and it's just me. It's me tripping me. It's not the market tripping me. The market's going to do what it's going to do. The market's never right or wrong, because the market's just trying to find value, right? It's up to us, and the emotional side of it is what is going to get in our own way. So when we can come up with structure and, playbooks, frameworks, strategies within inside of that, and we know when to deploy them due to reading the narrative, we're rotational, we're trending, etc., which isn't too hard to do over time with a lot of experience and practicing and watching and having aha moments. It will just come down to you and your own personal personality and those rules based around it. Okay, so for you guys doing the New York at night, yeah, volatility is great. Trades can be done. What takes me to knock out a trade in Asia could take to London. You can knock that out literally in 2 minutes in New York. I get the appeal, but for me, getting up in the morning, 7 a.m., and then going and training and then doing bits and bobs for the day and maybe scalping Asia and you know, trading intraday Asia and maybe intraday London, I'm fatigued. I'm exhausted by the time that I'm getting to New York. All these guys in New York are waking up on Wall Street with their coffees, fresh as daisies, and you're going against them with like heavy eyes. Like, is it really smart? I don't know. You know, it's just that's my 2 cents. That's the way I see it. I want to be sharp, and there's just days where I'm tired or feeling you know, like while I've been doing these slides, I won't lie, I've got a few little trades in, tiny trades. You know, already at break even, all good to go. But when I'm doing my slides, generally, I'm not trading and doing the slides for you guys at the same time. I'm doing the slides. If my wife wants to go and do stuff, and we've got to go out soon, I'm not looking at a trade. If I'm flat, I'll wait till I get home. Okay, so these are just little things that you yourself need to come up with. You might need to have some hard hitting losses to go, shit, Romps was talking about this on that Wealth Club lesson. Maybe I need to start working myself out what works, what times, what sessions I trade best in, and that sort of thing as well. So we'll jump back to it. But yeah, it's a little bit of food for thought for you guys when it comes to psychology and separating theory and psychology, and how after the theory is learnt and you've got a really good grip on things, you can still be the worst trader out there if your psychology's up shit creek and your risk management doesn't exist. Okay, so narrative and structure. So this is where these levels come in a really cool way that for those who don't have or want to have the luxury of TPO or something like that, where you can break things up into all the shapes and you can sort of follow it around and build composites and stuff and get a lot more extra statistical flow data. But you want to keep this very two-dimensional. You're running a business, you've got a family, whatever it be, or you're just not interested in going that deep into the weeds. I get ya, but this is what you can do. So in this chart, I have a really simple, clean structure that has price rotational within until we break above either 1, which is this little one up through here. So here's a monthly level, naked resistance, required monthly close above for a shift of condition. Okay, so on the monthly time frame, we need a green close above, and then we can look for a wick back down or a wick to a point of control in this area or something to go even higher and start to fill in the imbalance higher. So that's just the first step. Are we there at the moment? No, we're nowhere near it. Okay, so or below 2. So naked support, required a monthly close above. Sorry, I put that is below. I must have copy and pasted it, but we need it to close below the level. Okay, same as up here. We get a close below, then we can look for this thing to mark down lower. If we get a wick back up through in either side, well, we're staying in here. Okay, all I care about is trades now within this range between 1 and 2. Okay, I said it earlier on, and I'll say it again. I don't give a fuck if we're going to go to all-time high from here. I don't care if we're going to go to Goblin Town or Valhalla. It doesn't matter. All that I care about to make money is we're wedged between these monthly levels. And as long as we're within inside them, I have trades to be done and business to be done every single day of the week, besides Saturday and Sunday, between 58,500 and 76,300. Okay, guys, there's your price action trading range from this point. Value area will make it even tighter and dynamically move as we go along, that we can take advantage of shortfalls. What does that mean? If you see a wick that gets up to this point up through here and doesn't quite hit here, well, you may have had a value area high at this point. And that is where anything that you took along from down here, you would go, yep, I'm going to take that. I don't even care about that. If we get through that, then I become a buyer here. But at the moment, all I know is this is where responsive selling steps in, and I want to get out because that's a wicked trade in there. So that's why we're going to talk about the volume profile after as well. So one is resistance naked monthly level, a midpoint triggered, washed and failed. We discussed this just before, and that was this example here. We understand what happened. We understand the mechanics, the auction market theory, those who bid wash levels, those who become supply when price gets back up, so the buyers get out of break even, huge flood of selling. And smart money goes, well, hell, I'm not buying this premium. So what do? They stop bidding as well. And we roll back to a fair value, which was, we could probably measure that, it's probably 50% of this bottom section of this candle. And now they're trying to iron out, should we attack again or should we roll over? Okay. So midpoint, triggered, wash, failed, reclaimed, 50% of premium discount. So again, I haven't measured it, but I'm just assuming. Look at it. Here's your 0. Here's your 100. Here's your 50%. Okay, we're inside of a range. Get it? Rotate, rotate, rotate for the rest of time. And that is just one of the laws that we expect the same until proven otherwise, which is known as a shift of condition. So support naked monthly level is naked here and it's naked up here. So they're both naked, they're both hot, they're both ready to go, they're both ready to get swept. Either in this case, having so little wicks, I would potentially assume a traditional swing file pattern. Up here with this huge wick, we have this high supply level. So I'd expect maybe up to here and back down. It doesn't have to take that out. It's already got liquidity out of that point there, and would be getting up into that monthly level if we get up that high. Okay, I can use this to monitor strength, weakness from a narrative point of view, not as an executional. So I'm not executing off this chart, but what information on the monthly did I get from just chucking in 3 horizontal raves? I got everything I need to know to anyone who's going, I think we're going to go from here tonight all the way down to 45K is just ridiculous. It's just nonsense. So too much time spent on one edge may signify compression, law 10 as we know that. Time spent on both sides tells me more sideways to stick to intraday trading, okay? So if we have, for instance, a monthly, so this monthly closes down through here, and then we open another monthly and it does a doji, and then we do like another sort of little up candle and it sweeps this high, and 3 months later I'm going to go, I think this is cooked. I reckon that's more likely to happen now because we haven't even been able to make any grounds. Okay, so I'm always looking for that kind of price action, but the way this structure is at the moment is it's sort of setting up very, failed sort of, I wouldn't, it's the ugly stepsister of Morningstar reversal. You need to see the wick lower. You need to see the liquidity taken. So it didn't happen. So this pattern rejection, full sell down from here, then from this point, if we get here, this comes up, we actually do hit this, is which is sort of what I was talking about that could happen. Then, we come back down, we sweep this low and then go. Then we're still rotational, but nonetheless, at the moment, I'm seeing this is pretty, this is what I was saying before. I'll tell you why. I see reason to go lower, but I also see reason to go up to this level here. So because I'm very, very 50-50, what do you think that does to my lower time frame trades? Do you think I'm getting in them and I'm aiming for the monthly low or I'm aiming for the monthly high? Not quite, because I'm unsure of it, and the price action itself can tell you how compressed and choppy it is in here. I'm looking more for that quick in, out, in, out. My take profits are very aggressive. I want to get in at the moment. I want to get to the next, even 4-hour level, which I'd said to some of the lads this morning. I did straight away. It was only a little bit higher, but I took out a decent. I took out half my position. And I did that so I don't need to move to break even, because if I get stopped out now, I basically have still won out by taking enough off it. If it progresses any higher than here, then I'll move to break even. But I'm using this very sort of aggressive, like take profit, break even, or take profit, or both, and then it runs to the next kind of daily level or something. We've got one a little bit higher at the moment, which comes in around 64,215, which is with a developing weekly value area high. So again, like that would be like another level. I've actually got to take profit on it. So I'm just being very aggressive about like all of these built up levels. But if something was really clear cut, like a compression or like a really, good expansion or a SFP of the level. So say we SFP'd this low and then we came back up through the monthly level. Then, so, hypothetically say we have this wick down here, and I've got in for whatever reason, old NPOC or something. Ideally, I've got in down here. Won't always, but I've got in. And we've reclaimed the level, and now I'm going, hell yes. From here, do you think I'm going to start looking at sort of little levels in here to take profit? No, because it's done something on the monthly that's monumental. I'm looking for something like this. So it's all sort of relative to what's happened. And what's relative to me at the moment is we're rotational between these 2 points. So I need to treat it that this is going to do this. And while it's going to do that, inside of this monthly development up or down, it's going to stop me and stop me and stop me and stop me and stop me until I get something, one of these very rare movements where it's either going to go through here and spring back up, or go through here and drop back down. In which case, these type of trades are the ones that I'm willing to come back to break even on and almost use very wide take profit points, because that's where acceleration can finally happen. Does that make sense, everyone? If not, you can watch this a few more times. So the best trades will be above or below these monthly levels, obviously, as we've just discussed. Complete wick and reclaim, so a failed breakout, where we expect a run back to the 50%, like we'd treat this like a VWAP or a point of control, or the opposite monthly level. So in this case, it went through that low. I'd expect it to go back up to here and to here, or it went through here. I'd expect it to go to here or down to here. So I'm just going to turn my heater off. I'm dying here. All right. So if we monitor weakness on a breakout and it becomes re-rotational, we simply close and continue intraday trading. So what I mean by that is, let's also say, go back to our other idea before, is we've come down, we've got a really good trade in here, and we're going all the way up through here, and then all of a sudden it's a failed auction here. Then, if you've got hedge mode, you can hedge a short from up here, but we're not talking about hedging right now. Say you've gone, okay, this is looking like it's reaccepting. You can then close this one here and you can trade it back down from that point. Why? Because we become rotational. But why did we not? Why did we hold this down into here, not close up to our expectation point? Because if we get a monthly close up here, this thing can do this. And all of a sudden, this could become one of the biggest trades of your life. Okay. So always just thinking about that. And we're just using the monthly. And you guys can use the weekly and you can use the daily to do the same thing on a micronized level. So on the daily at the moment, we're going to be getting all these little dailies everywhere. So we're still treating, let's just say we had like hypothetically, a solid daily range in here, just hypothetically now, and you swept this low, then you're just going to trade it to here and hope for the same thing. But if it falls in, you're going to close it and do the exact same thing. See how this is just a micronized version of what we discussed on here. And on the 4 hour and on the 1 hour, you can do this, and it's just a micronized version. Just make sure if you go to a low time frame that you're not getting to the point that you're not making any money because you're paying more in fees to get in and out, and you're not actually getting into a profitable level. So that's another thing about low time frame trading. Your scalping days need to be very volatile and move with a large rotation factor, have a very large movement between point A, B, A, B, A, B, A, B, which is perfect, but it needs to have enough to be able to get in at market and get out at market realistically, without getting out too early. Because if you market in something, even if it moves a fractional percent, I can't remember what it is exactly, but it moves a little bit, you're still in the red. If you close it, you can close green and end up your market fees cost more than the amount you actually made in it. So you've got to be careful with that sort of lower time frame stuff. So be ready, be aware. So within the range, we can intraday trade and look for potential entries that may run across the range. We still know where old and future levels are to be actionable with. Doing this, we can see we had another wash failed imbalance level. Above that, we have just rejected. So this is zooming out now. I've zoomed right out on the monthly. And we can see that the similar thing that we were talking about before came up and touched it, rejected. So the exact same situation, we're talking about this one down through here. Now, even though it didn't quite hit it this time, which in itself is either a sign of weakness or maybe a sign of hold it and let's make this one look pretty and get a close at above the 50%. So, we don't know what the games are going behind the scenes. The big boys are in charge of that kind of thing. But at the moment, we've sort of got this set up, followed by a more, micro version of that coming through here and getting that set up in there. So we're just compressing tighter. So something else that I like to observe and watch is this leg down and this amount of time and space compared to this leg down, and you'd have to zoom in to get the time and space on lower time frames. So that's telling me that this, let's take this back a step. The selling was easier to be done between here and here, and the selling is getting harder to be done as we move into more of a discount, right? So the same thing, if it comes down here, maybe just a little bit down here. So see how it's just slowly getting less and less before we reverse? It means that in itself is just saying, we can look at order flow and see just how much volume was involved in here and how much volume was involved in here. And we might be shocked to find it was actually less volume in here and it still had good movement. But at the same time, it could be there was more volume in here on the sell side and less. But the point is, we don't need to get too crazy with it. We can just see it's moved less. It hasn't expanded equally. It hasn't moved all the way down to here. So that in itself says to me absorption. It says to me sellers are getting tired. It says to me that it might be time for buyers to step in. It doesn't mean this, but it could mean something like this. you know? Like this is where we're just starting to look at where we're getting compression. So trying to reclaim the older low wash level, but not imbalanced through shows demand around here. Okay, so remember we talked about this was the example we used earlier on that we bounced off this low down through here on the monthly. And then, we're talking about that point of control that was in here. We'll talk about it after. But see, it's washed, and I'm not really big on getting washed. It closed below it. Generally, I don't love that because the monthly closed up here. That's what we call a claim of structure. So it reclaimed that structure. But two things that sort of I'd be looking at here is, let's say we front ran this naked monthly, but we also closed lower, and I did a measurement on it. This extra little bit lower is what that measurement there of front running that level there was. So it's either just skewed down, or it's saying we're still heavier on the sell side and we're unable to have the bull step in with enough oomph. So maybe this candle could be a red monthly down. So these are just the things could. Just I'm getting in my head, and I'm getting conflicting things myself at the moment. So my higher time frame, I'm just waiting to see something more clear where I don't have. I'm always doing scenario A and B, but I want to see a skew in the scenario. I want to see scenario A of up be 70%, and then 30% down or whatever. And that's when I can be more actionable and push my trades and trade more in the direction of lift or drop. But at the moment, it's quite 50-50. And I mean, we can kind of see why it's 50-50 because it's very condensed and very choppy. Because traders like myself are like scratching the head, being like, shit, which way is it going to be? Which way is it going to be? So potential wick below this fresh monthly and run or imbalance. No one knows, but we're ready for either outcome. Okay. So again, we had a lot of demand down through here. I don't love the look of this low. Like, look at that low. Look at that low. We could go through these all night. Look at that low. Look at these lows. But like, is that really a reversal low, guys? Prove me wrong. Hell, if it does this, and we can all laugh, it can happen. Anything can. But at the same time, I'd be more cocky and confident about this doing this had we had a nice juicy wick. Yeah? But we haven't. We've got this very sort of poor monthly low equal low type thing. So even just something funny as to whether it wants to go here first and down, or it does actually just want to fail on a Zol, go straight down. But even it just puts like, like a little wick in, and then we close back up here. And then everyone who was positioning long gets stopped out. Everyone's gone, screw this market. I'll wait till something bigger goes in, and then it pumps back up to here when everyone's offside. So just little things like that where we're always thinking about when we're observing the market. And again, guys, executing is hardly ever, okay? And when you are executing, it should be a winning trade. Like, that's what we're all trying to do, right? But as far as majority of your time spent is not on the 5 minute just hoping to see green candles. It is doing this kind of thing, going, okay, there's a discrepancy, there's a wash level, it did this, it front ran this level. What does that mean? What are the different things that means? Can I get any information from this? So when then we work our way down through the time frames. Okay, so once we have analyzed the higher time frame, the boundary of price and potentials beyond, we can work out way down to navigate our current range. So I've added the weekly. So adding the weekly levels to help us navigate lower time frame intraday trades or increase resistance or support around certain higher time frame levels. So I've got the old wash level, I have a new weekly level, and here's our monthly level. So already we can see that this area should be prepped and proper for some sort of reaction. Even if it's just up here, and then it drops, there's still a trade to be taken between here and here. Just a nice little contrarian trade. But at the same time, if it just wants to do this really ugly double bottom thing where it comes back down into here and then it does that and then it finally does that. And what do we get? A big AMD, monthly AMD. We wait till later in the year and then we actually take off from there. Is also a hypothetical that I do also have in mind at the same time, So just you start running ideas, you start bringing in other concepts and that sort of thing. So that's what I'm looking sort of at on the weekly as another potential. Still not loving the look of this little tiny baby low when normally decent sized reversals carry large liquidation and large capitulation of the market. If trading lower time frames, intraday trading, and we approach the higher time frame, we know exactly where we are in the scheme of the higher time frame trader and may become an automatic take profit or closure and reassess before taking another trade. Okay. So then we work our way down to daily levels. So this is some that I had when I was doing the slides yesterday. We got that. That's the daily level I'm talking about at the moment. Number 3, they're going to take profit on, and we get up there. We're actually above number 2, and we're holding it right now. We're trying to hold on to it. It's got a point of control through it. We're a little bit higher than that. And then number 1 is that level further down. So we're just looking at, remember how earlier on we talked about the boundaries of the monthly, the breakout of this point and this and this. Well, we've got the same micronized thing going on here. Here is your current intraday trading range between here and here. Okay, going off monthlies, we've got this one here. We've got this breaker through here. At the time it was rejecting. Pushes up, compresses into here. Then we can see up towards this daily and this weekly, and then this old wash weekly that's at premium. And because the level's in premium, that's where these things get tough, even wash ones. And again, these weeklies and monthlies being so low into deep discount, that's where these things become more springboard than, say, if you had a monthly in the middle of nowhere. So you can also look at like previous wicks. I don't love these wicks. Generally, like that's a quick sweep down through. This isn't an imbalance either because it has that wick up the side, so it's not going to react the same. It can fall straight through from this point, but I know there's a value area low. See how I've got all this stuff in my head, guys. I know where all these things are, okay? Value area low that are pretty much tagged off around here. So again, you could have down and reclaim if it wants to, but the higher time frame value area low actually comes in further down in here, and that comes in with these levels. So I would prefer to be a bidder down here, and if I were trying to aim for something big and rotational, I might reduce my margin with my stop below the low, still 1% loss, but I've got plenty of area to play with. And why is it smart? Because it's weather responsive bidding. When we do volume profile, you're going to see those things, okay? But for now, all I want you to see is 1, 2, 3. One's the recent trigger push. So 1 was down here. We had that recent trigger off this naked level. So it's now washed, it's triggered, it's pushed higher, which is this point here. And then we have a new daily down through here that's naked. So again, let's just take a look at something for a second, guys. Remember the old rejection blocks that I brought up in the course? Well, that rejection block sits right under that daily. So that's where it comes down, or another we're up here for the new day or whatever. We come down into that, it's that rejection block as well with a daily level. So if you want to turbocharge your PD arrays, if it's got a daily or a weekly or monthly, use that one. If it doesn't have such a thing or it's already washed it, so just remember, if this one opened through, so say this open and this has already come down and wicked through it, which it already has hit the rejection block, then that rejection block is no longer as strong. Okay, so again, 1, 2, 3 trading range, just like this 1, 2, 3 on the monthly. Okay, so we're just looking at those type of things that for you guys that do have a little bit of spare time and might want to make some trades and know that we're sideways and know that we're a little bit uncertain, we've got conflicting narrative of up and down and that sort of thing, then here's a really, really easy way that you can be going through $1,000 moves or more, just trading with inside a range. And we could keep knuckling this thing down all the way down at the moment to 5 minutes. And we can trade in between that if there's enough space to go between. Okay, so it's the power of these levels. 80% of the time markets are ranging, 20% of the time they are trending. Remember that, get it in your head. This is why trading and learning to trade is so good, because 20% of the time is hardly any time in the scheme of how slow these things move. This gives you the ranges that we can trade aggressively 80% of the time. We know where the shift of conditions are for the 20% of the time. So I've just done this at the moment. This is a little bit simple, but I've got our monthly, washed monthly level. Nonetheless, though, it's got the FVG above it. It's deep premium. We can see that the monthly rejected here, and we've got a fresh monthly down here that we're watching for. So we're inside of that range. Then we've got the weekly. So here's the highest weekly here. And I've got another weekly down here. So that narrows it even more. And then here's our dailies. So you can see how I've just gone into a smaller point. And now I can just trade with inside of that. And if it breaks out one of those, it's a shift towards a weekly. It breaks out one of those, it's a shift towards the monthly. Okay. So this is how, like, knowing to be realistic with your take profits and your entries. So you enter, but you go, hey, let's just say we come and we swept this level here. What I would be looking for would be here and here to be pretty much thinned out and done with the trade. Okay. Because that's what I'm confined within. There's no point me taking a trade from here and aiming for up here, all to get stopped out over and over and over, trying to do such a thing, run out of margin or run out of interest, and then it just shoots up and I'm like, fuck my life. Okay. that will happen, and it's designed to do that. If you can be smart, this is not being greedy, okay? This is not being a moon boy or girl. This is literally just getting into a trade and actually being realistic and closing at 75% of it and knowing that the 25% could be this trade and being okay with it, okay? Your account grows. And remember this, guys. As your account grows, your positioning grows too. So if you want to screw around and get stopped out 50 times, all to get that one big trade that might even cover all your stop apps over a really choppy area, well, great, good for you. But what if you just do all these little trades and your account keeps growing and then the market gets more wide and more easy to trade? That 1% that you're using to trade with is now, twice as big, or, half as big, 1.5 or whatever. It's a lot larger. So you're still trading within your rules. But when the market does get easy, you are able to compound the amount that you've got in your account. So don't be scared to get in and just start smacking aggressive take profits as long as they're above your break-even point. Grow your account. And like anything in life, that's why I love subscription models with things. If any of you guys run businesses, you'll understand the subscription model for someone psychologically is just $10 a week or $5 a week, but then you have them, the longevity of a bunch of people, and all of a sudden you go, oh, that's actually some pretty good money coming in, right? So it's the same thing. If you look at something and go, oh, I'm only going to profit off that for this trade like $200 or whatever, it's $200, and you keep doing that twice a day or whatever. I was doing a thing when the markets were a bit wide. I was aiming just for 1,000 a day, right? I was getting more. Some days I was only hitting like 800, but I was being conservative, just giving myself a realistic goal at the time at work. Now I'm doing levels, and this is how I'll adapt to the market, but doing like 1,000 a day, 365,000 USD a year, and not too bad, convert that to AUD or New Zealand for Zaki, it's not bad money, So just a few different ways to look at things, and that's a psychological element as well. But if you can be realistic, trade within inside the range that is being presented to you, that is realistic, you can make a lot of money and have a very high strike rate as well. So that was the levels, guys. Let's move on to the volume profile now. So this is adding precision to entry points, take profits within a high time frame level. So this is where we're going to make these two work together, because the next thing I'm going to have, if I enter the session right now, you're all going to say to me, yeah, cool, but I've got 50 levels on my chart. Which ones do I take? Use this, okay? Because this is going to help you. And this is what Liam and I sort of went off and chat about just before, about maybe waiting for some levels. Even if they do get a reaction, it's not the high quality one. The high quality one is where something like this is saying you're in the responsive buying or selling point, so I'm going to participate with a level with inside of that responsive point, okay? So before we start dissecting the volume profile tool, I want to mention the variations of tools found on TradingView, and also highlight that the MM3 course goes into volume profile more in depth about the shapes of profiles, which can seriously supercharge the narrative read aspect. You saw me talking about the P and the B shape shit earlier on, the D shape profile. Just going back to that quickly, and we have a look at this. We have somewhat of a balanced D shape, okay? What does this mean? This means this D shape in here, can't draw. This D shape in here means pretty much this, anything goes. But then if we were to look at this other blue shape I have in here, this is a B shape profile, okay? So a B shape profile, somewhat, it's not completely below this volume. It would be better if this value area high was a bit higher to make it easier, but it's a B shape profile, meaning you get a good time and space on the outside of it. They all go, oh fuck, I need to get out, and it pushes us higher back towards where? This, because D shape is rotational. So all we're doing is a reclaim of this low down through here, and we're trying to get the strength to get above the point of control. Point of control is good when it's low and you get above it, because from here, then that shows majority of the volume was in here, so we have an even bigger oh fuck moment, and things can squeeze a lot higher very, very quickly to fill out inefficiencies. So that's why I'm saying learn your shapes. Your D is balanced, your B in the low is generally a point that if you can get a close above it and some trading happen and it builds value, then you're looking at going higher because there's so much volume that's offside, either gotten out or wrong, and they need to unravel. And we have this all profile that we're going to go back into. And then all I do as well is I've gone from the low, absolute low, to the current moving across, and now we have a P-shaped profile with inside the B. So if you join these, this one here is this volume in here as well. So this is building out the B. This is the localized P. Okay, so why I've done that is this is the value area high, that's the value area low, this is the major value area low, but this is the more close, intimate one that we can see. And for my order flow guys, you know that if you have a P-shaped profile, we wait for the next candle to open, we mark it short, and then from there we put our stop above the high. So the same thing. If we lose this area down through here and we start building in here, we're probably going to be seeing a lot lower from that point, okay? Because it's a P-shaped profile. So we're looking at these, but the same with the B-shaped profile. We see a B shape in the low. We close above its value area, ideally above the previous candle's point of control, which is this one here in this case, because we're going off ranges. If we get a close above here, which is easy to do, and it's above the value area high, so we're closing up in here with time and space, something being built, then we're above the B, and the P then becomes a strong P. So something else as well is a good trending market. You'll generally see things like this. You know, they might look a little ugly, and then every now and then you'll get one of these, and then you'll get a P, and then it finally closes here, and then it marks down, and it gets below that, and then it rolls over, right? Vice versa, good trending down market, you'll get B-shaped profiles. It falls out the bottom of it, you get another B-shaped profile. You know, you might get a D-shaped profile. But my point is, you finally get this really low B-shaped profile, and you close back in here somewhere, and you've accepted, and you're like, okay, sweet, now we're going to head back up again. So that's why a very long version of me saying, guys, go learn your shapes, what they mean at what point, and then you can start looking at your volume profile more three-dimensionally and less two-dimensionally as just that's a level, and that's a magnet. Instead, you're going to be like, D shape, that's rotational. B shape, if we lose that low on the B shape, and we start to build out value between these monthly and weekly levels, and we're showing weakness, and we lose the from the 2022 low anchored VWAP, which we'll talk about as well, we're probably eating shit. Okay, so see how I know what that means and what that level means and what that level means, and I didn't have to draw these in. The maths for me. It does it for me. I just got to look at a visual shape. I don't need to do a lot of work. I just need to understand where to sort of put them together, and that's a skill in itself that you guys will get over time as well. So let's jump back into these slides. The lesson will be covering it more in a simple way of triggering and meaning. So shapes, go learn yourself. If it's at or below a value area low, buying is allowed. If it's at a point of control, a recommended partial is taken. A take profit partial if you've gone from the value area low. If it's at a value area high, another partial is taken. See how I'm not talking about going both ways? I'm just talking about, like I said at the start of the lesson, just buying, okay, just to keep this really simple. If it goes beyond the value area high, the trade is held into the higher time frames levels, as well as a few advanced observational techniques that may trigger unorthodox entries that are contradictory to traditional rules. Example, you buy high point of control after putting in time and space above a value area high, hold your breath until the value area high is reclaimed in case it's a failed auction, and then you run it higher or stop out at break even. Okay, so that's very sort of for you guys who don't know what I'm on about. I'm going to be showing you I believe I've got an example to show you. I have a monthly example to show of exactly that. Okay. So before we get into the volume profile and all the good stuff for those watching who do not understand the absolute basics of range trading, I suggest watching MM3 and starting up in your own time on these prerequisite 101s, starting with inside and outside break. This is universal. We can make it relevant to a price action range, a volume profile range, LTVWs, etc. So let me show you a quick few examples for argument's sake, just to get the reps in and for revision. You should have these diagrams. If not, I'll give them to you, okay? Levels we just learned last chapter. So daily outside break that pushed through and often flipped. So we had a daily level up here. We put some time and space in. This is an outside break, and we pushed higher. Now, obviously, there's more levels. There's a trade in here, guys, okay? So that's my point. And daily outside at the bottom. Bit of time and space in the lower time frames. You know, HS level through here. I'm not just doing this one thing. I'm doing all my analysis on top of it. That's how you trade. But this is the outside break here. Okay. So we have the outside break and we move lower from that point. So inside, outside break. Okay. Levels we just learnt last chapter again, added 4 hour. So I'm using some 4 hour levels. I dropped to the 1 hour time frame to make this clearer and easier. So I marked the levels on the 4 hour, dropped to the 1 hour time frame is what we're looking at. 4 hour inside breaks, maintaining range integrity, keeping trading intraday more narrowed into quicker intraday trades. Okay, so that's this side, the inside break. So we've obviously made the 4 hour level through here on the 4 hour chart, comes down through. It spends a few hours putting a Morningstar, ugly for Morningstar reversal. Let's count it anyway. Morningstar reversal in, it reclaims, and that is from there. We don't. That is this trade through here. So even though we haven't come from the bottom, we're getting that time and space. We're reclaiming it then up through here. We have the inside break. We've come up, we've hit the level, we've got our first trade, we've come back up, we swept this order block up through here, we got that time and space in here, and we are moving, and we did move back down to this level where we nailed a trade from. Okay, so again, this stuff is just using price action. It is just using these levels that we just discussed. Okay, so it's really quite simple. Inside outside breaks are happening everywhere on every time frame, all over the place. Just retests, but the little see-through part makes it more of a, you don't want to see something like that. That's, maybe on the 1 minute to time and space to confuse you, but like we like to see this because why? Acceptance, time is acceptance, moving sideways. So that's how we get the space. So the time and space through here gives enough time to mature and say, hey, we are worth this amount. And when it comes back down, it's going to go back to its own personal. It could probably put a point of control in there. And it probably goes right through there. So as soon as it reclaims here, it gets magnetic back to there. And in this case, strength to run to the other side. Okay, let's keep moving on. So LTVW, inside break of developing yearly values. Okay, so when we're at all-time high, an inside break of the developing yearly value area, and law 2 happened. Try to hold the point of control, in this case a VWAP, and we went straight to the value area low. Perfect trade in there. This was earlier, like what I was describing right at the very start of the lesson, the time and space that happened inside of the rebalancing of the developing yearly of the 2024 VWAP, and we pushed pretty much to the other side of value. What stopped it? The 2024 value area high stopped it. And I told everyone that as well. So don't aim for here, aim for here. Okay, why? Because previous levels are stronger than developing, because we use developing as a gauge of are we balanced, are we imbalanced? Okay, so that's how we did that. And just quickly on that note, like I keep saying to you guys, if we look at the daily, we turn the LTVW on, and we have a potential little baby inside break happening. Rebalancing, like over here. Not a great one. I don't love the fact that we're under here. That's probably what's holding us down a bit. This old developing level could override this and just turn this into shit. But so I'm aware of this, so I don't love this. That's why this one works so well, is because it was quite easy that we're rotational around that once we actually got this sort of outside break here off this monthly level, which had formed, then it was able to push up from there. Okay, so you just see how teach the concept, but it is required further analysis to understand where that is happening located on the chart to other sorts of things happening. So this is where we bring in the LTVW, the levels, and we haven't talked about volume profile yet, but I'm just giving you the examples of things that you should understand, because if you don't understand this stuff, and I told you this was going to be a good glue night to learn all these new things and put it all together, well, you haven't learned the simple, I shouldn't say simple, but the 101s, like the things you should really know before you even bother trading is things like the outside inside break. Okay. And one more for argument's sake. So LTVW indicator again, outside break of the 2024 value area high. Okay. So 2024 locks in, and then we've got this beautiful previous level that marks out through time and space. This way, we had this huge, we can go off here. We have this huge time and space. It comes down into here, and it pushes off to all-time highs. Okay. Then this time we finished the 2024. From there, 2025 formed here and here, which we failed to hold. But guess what happens? We come inside of it. We were just discussing this point, but we come up, we reject it, and we have from there, we have these. So this is the outside break. And at this point here, we have a inside break into the 2024 value area, which we're rotating. And it is questionable that we have not law 2'd it yet, down to here. So this opens up for lower as well. You see how we're slowly building all these ideas of, fuck, well, hang on. I really would like to be a bidder from down here, not here. But if we reclaim here and I got in here, good for me. But then things start looking juicy when they get around this VWAP and if we move up, back up towards this point through here. Okay, so this is how we can start doing this, but it's just inside, outside, inside, outside, inside, outside break, snip, snap kind of shit. Okay, and this is the stuff that you should be aware of and be looking for and be mindful of and expecting too. They happen a lot. So if you miss a trade, don't go buying premium. Wait for the break. You know, wait for it to come back for that break. So as simple as weaponry as just combining high time frame levels with a volume profile is, if you're not proficient at this simple 101 of identifying inside and outside breaks across different mediums of analysis, this strategy may not be simple for you. So take a moment to audit yourself if you need to spend more time understanding this market flow and narrative read before touching an execution state again. And if you want to be an absolute weapon when it comes to using volume profile, PA trading, the long-term VWAP indicator, market profile, etc., I keep flashing this up. You should have this on hand and religiously be trying to compare this with your observation analysis, because at all times the market is doing thousands of these across different time frames, indicators, etc. The skill is to be able to distinguish the likely outcome, which is what these laws do, and apply it within the framework you've set yourself to simply get your hypothesis to trade from point A to point B correctly, because that's all we're trying to do. So I showed you guys earlier on how we're inside those daily levels at the moment. We're inside the weekly, we're inside the monthly. So at the moment, I'm only looking for this kind of shit going on with inside of the daily. Okay, I've got my framework, I've got my area. I'm looking for this. I don't really care too much. Maybe on the higher time frame, I'm getting I'm getting all this shit in my head like, oh, hang on, we got the inside break of the developing yearly, and it's skewing me towards a rotational factor, which gives a few brownie points to the upside. Okay, but at the moment, if I'm intraday trading, I'm aware of that in the back of my head, but I'm just going to use this to get to point A to point B, which could be wrapped up in half a session, half a London session, right? So that's sort of the intraday trading that we're talking about. So one last time, study this beyond inside and outside breaks, okay? Inside and outside breaks is pretty much just law 2 and law 4, okay? This is the simple stuff to learn. Is this law here and this law here, okay? Coming outside of a PA range or something, moving off, or inside of one and moving across, okay? We're just going to, but there is a lot more, and obviously you guys a lot of the time look at this and go, oh, I don't use TPO, but this is volume profile too. This is exactly the same as volume profile, okay? Just your value area high and value area low is based off volume, whereas TPO, these two levels are based off time, okay? Time acceptance. We still use volume profile, points of control in market profile, as well as time, just a few added extra levels of confluence. Know that this alone is just for building hypothesis narrowed down into the scope of boundary you've created with levels. As we just discussed, a 1 hour level sweep in the middle of nowhere is probably not a generational entry, but a 1 hour sweep below a monthly at a 2024 value area low, what I just said, well, that may be it. That could actually be that could be your first $1 million P&L. Who knows? Okay. So narrative reading is required to know what strategy to deploy, what the probability of it will be, is it even worth taking if it's 250-50, and what is a realistic expectation of take profit scale. Next, naked 1 hour level or run to the next 1 week breaker level. This is what you've answered before executing. So before we do executions, we always have gone higher time frame to the lower time frame, and we have a very good idea of what's to come. So TradingView comes with many types of volume profiles. In other presentations, we can discuss the use of other setups and automations some offer. I want to just cover the 2 for now so we don't blow out too much. The first one will be session volume profile. So it's not exactly what we're teaching, but this is good training wheels for you guys to play with if you're not too sure about the fixed. We have it set up for open to close daily, meaning it's just going to every single day give you a fresh volume profile. This can be useful to simply monitor each day's value areas and where the point of control magnet will be. Give a quick dissect to this before we complicate it using the fixed range, where we have to control where it starts, ends, and we want it to anchor in a developing state to continue adding new developing candle volumes. So I've turned on the session volume profile. So you can go into indicators. You can literally just type session volume profile or volume profile. These are my settings, guys. You can take a screenshot. You can get it off me after. There's nothing too out of the box I've changed. I think I use row size 188 is different. I use that on my fixed range as well. But I'm just using the 68 I use 68% value area on here, but I think I use 70 on the other. It's not a huge difference in the scheme of how we're trading. We're just getting it to that point, and generally that's 2%. It's not a huge discrepancy between sort of what comes up. It's not like it moves $1,000 or anything like that. But here's the styling. Here's how I'm just highlighting. I have at like extend right POC, extend value area high. So this extends it naked, meaning if the next day opens within, it's going to extend the value area high and the value area low, and the point of control hasn't been hit. It's going to extend it through time, so you can watch price literally run into it. Okay. And then I also have session breaks on. I like to have session breaks on. How you do that is go into somewhat of a lower time frame, so it allows you to, I've got them on at the moment, but if you right click down here in this bottom axis, you can turn on session breaks. All that's doing is a session break is classified as the daily open. So it's going to put daily open lines, so I can go, okay, so that was Saturday, Sunday, Monday, Tuesday. And, you know, when we go and add, for instance, the session volume profile onto it, we are going to get loads. Let me just turn off some other things that might be. Just wants to take forever to load. I'll show you in here. We'll pop back over in a sec, so we're not all sitting around staring at it. But yeah, that's going to be putting these in there, okay? So these volume profiles. So just quickly switch off the extend values just to show you this. And on the next one, I'll have the extend values on again. Have you loaded yet? I don't know why it's doing this. Maybe it's because I'm live. I don't know. Maybe we'll just jerk it with a. And generally, I like to look at volume profiles on the 30 minutes as a rule. Here we go. I'll look at it on a 30 minutes because it's a TPO rule. Everything we do on TPO is 30 minutes. So it's just a good time frame that it's going to work best if there is some variation in value. But at the moment, you can see that just each day it ends. So if I go into here again and I turn off these values, you'll see how each day is just confined to its close, right? And confined to its close and so on. But if I turn them back on, so we'll extend them to the right again, we can now see that on Friday, it's stretched out until the naked value area low, because it's naked. Once this day closes, all these levels are naked. We can see that as soon as it touched the point of control, it didn't need to extend any further. Value area low gets hit, doesn't need to extend any further. And then the value all the way through on the on Sunday, so the Sunday as well extended through on until the late part of Monday, and then it hits. So that's how it extends it across, shows it's naked. So a really good thing to have turned on. So if you are zoomed into the weeds a little bit, you can be like, hang on, what's the dotted line over there? Oh, okay, we got a value area high. Shit, I didn't see that. And obviously then you can potentially go, well, if I'm going to trade, I want to do a take profit there or something like that. So this is just a very square way of having all of these volume profiles turned on. And we can see at the moment, you know, even going off yesterday, right? We're still confined today's trading with inside. And we got this value area low here. We've got this day's point of control. We've got this great point of control here. Because we have the value area low, I say don't diddle in the middle, but hell, if we do come down through here, then, you know, maybe there could be something there. Just maybe, you know, so, but again, we are quite condensed up through here at the moment. So, you know, giving it a bit of a breather, and we're not analyzing the markets. We want to sort of show you that. So previous day value area high, the previous day point of control, and the previous day value area low. And then when we have the new one, it's the developing daily value area low, point of control, and developing value area high and low. So the previous locked in are solid executable levels, guys. So we can execute off those. Developing in flux is observational gauges. Okay, so this value area low, as price moves down, then all of a sudden the value area low is going to be down here, but moves up here. Value area low is going to be all of a sudden here. The point of control is going to go from here, ideally, and shift up to here, making a P-shaped profile, which is what we want, but we don't want to see it drop below the value area low if it's migrated up as well. So you can see I could rattle this off, but this is how we're sort of just watching this thing progress higher or lower. Okay, so developing is just to gauge it. Where the point of control is it low? Is it lots of volume compressing it down? Is the value area high all the way up here? if the value area high was say up through here and we had a few candles move this way and all of a sudden we saw a bit of a push up, we are likely to go straight to it because it becomes a magnet and it goes back to where the perceived value is. Okay, so just a few little things, but again, if you're looking at taking a trade, auction market theory rules apply. So what that means is at the point was like, we have this come out through here and we come up, then we can take a trade off that point but at the time of this developing, you would have needed other reasons to take a trade. Well, ideally wouldn't. It's saying that for the day, this is where it is, but it by itself is just developing and I'm not going to take trades off developing. Again, if this was here and it didn't move and it reclaimed it, it is looking good. But yeah, obviously the responsive bidding happens underneath. So you're getting an idea of where the responsive bidding and the responsive selling should happen, but it will move. So it's just something to be a little bit aware of that, you think you got a winner and it's you got in here and then all of a sudden from there the value area low moves up higher or the point of control moves lower and you're like, oh shit, it doesn't look as good anymore. So a few little things about developing and previous. What else have I got here? So if you've done MM3 or been paying attention to my channel, you should know these rules like a broken record, but to go through to be thorough, below value area low, responsive bidders step in and will work to keep price within inside the value area. Above the value area high, responsive sellers step in and will work to keep the price within inside of value area. Once auctions complete and the responsive buyers or sellers are successful, the most likely place for price to gravitate back to is the point of control. Be mindful of a higher time frame value area low or point of control or value area high interception, meaning like if I were to be looking at a little value area in here, but I forget about this big greater bad boy, then that point of control could snuff a trade before it would get to a value area high. So it's just important to always go back to your higher time frames, reset, observe, see where the big levels are, or just don't fuck with the lower time frames and just trade the higher time frames or the mid-term time frames where you don't need to have so much shit on your chart and you can just go, there's just one big solid VA. I'm going to wait till the value area low hits, and you're probably immediately going to outtrade most people just waiting for that because patience in itself is a skill. So the position of the POC tells you a lot about the market. A higher POC tells us more volumes around the value area high, showing while above the POC and compressing to the value area high, we need to look for a potential breakout. Failures above the value area high, then losing a high point of control generally means we see the value area low or lower, especially if a P-shape previous profile around premium areas such as above a macro value area high or monthly value area low. So again, it's what I was saying before. You have a P shape, tries to break out, fails an auction above it, point of control through here, gets down through here, then we're probably going to go to this value area low. But if we lose it and start building value, then we're probably going to start moving down very quickly because we should stay in here to progress to make another P-shaped profile in that high. So you see this can get complicated really quickly. So let's just step back and actually learn the volume profile. And we can do nuance and stuff in other presentations. So since Friday, when did I do this one? I don't know if I probably did this yesterday, so it might not be relevant. But since Friday, we have a really clear range. Price yesterday's rejected the Friday value area high. Price on Saturday held the Friday value area low. Clearly ranging between these two levels, going off daily levels, off these daily volume profile levels. This is my TPO, folks, would now be a 3-day composite. So, once you've closed, you'd go, okay, we have value inside of this candle, and this one is inside of this one, and this one's inside of this one. So you'd merge them all together, and you'd find where the value area high and value area low is, and that would be called a 3-day composite. So for you guys who didn't know that, that's what we talk about with composites. So also remember, we trade 80% of the time and break out at 20% of the time. So 80% of the time, responsive side is winning. 80% probability from buying or selling that zone when identified correctly. You see, while the edge is the edge, the skewed probability is in your favor to wait for the edge. So again, this is actually, it was after the fact. I think I might do it in the next slide. I showed where we got in again off waiting for our edge, and then you can take profit off that point there. So maybe I just go into the next one. Yeah, so, and just throwing a few slides in here after the fact. So this is like I did today. The weekend gets cleared back to Friday's value area low, and the previous week volume stepped back in and pushed the price back through the Friday VA. And a few of the Wealth Club members and I were trading live, and we got it right off the bottom. So we were actually able to get in off this area because we anticipated to clear out this day back to the low of where Friday finished off. And once we reclaimed, we ignore this and we go, where are we going from there? We're able just to push straight back up and take some profit off this value area high range And then we've obviously progressed up from this point here. And then even though it's been washed here and here, that's probably where we are now, and large point of controls come through. We just need to be mindful of these old value area lows and highs, then acting as a point of a large amount of supply who would want to get at that point there. Okay, so we're always just sort of looking at these areas. But we did have a really big wick that went up the side of this and cleared these naked levels out. So it's somewhat mitigated if all these stop losses or some take profits or whatever allow people to get out. It can make it more of a quick move when there's already been mitigation that has happened. So keeping an eye on my channel in the Discord, I do narrate my observation analysis. And for those live with me, see where I'm calling the absolute B or P share profiles on order flow. You'll notice my contrarian style of trading isn't just difficult, but my analysis is objective data and then thinking like I have an extra 2 or 3 decimal places in my account and looking at all the fresh shorts going into a developing yearly value area low area and fresh Friday daily level. I just want to sidestep off volume profile for a moment as a member is asked to talk about weekend PA and the current flavor the market has been doing lately. Okay. So yeah, I'll put my insights in there, which is sort of explaining all of this stuff. And sort of where that's the absolute low I called right at the very bottom of that wick that went in here, right at the bottom. Okay, so that's what you're able to do, knowing where you are, where you can execute, and then looking at things like order flow to actually be able to take trades from. Okay, so I want to mention this observational to the current market conditions, rotational between monthlies and weeklies and dailies, as we've shown. I'm not going to bullshit you here, okay? This is 3 out of 4 weekends getting completely cleared on Monday back through Friday's V8 and then resetting like the weekend never happened and Friday went on to Monday, okay? So how I've got those is this is your, if we go through here, this was your Monday, this is your weekend, completely swipe the whole VA of it and then rolled over. This was the exception where we closed up here and we had a Saturday, a Sunday, and we only cleared back down into we still cleared. I should make it clear. We still cleared the whole weekend, but we didn't come right back down to the Friday Valley Low. So now actually it's actually 404. I was tired when I did this. That actually did still clear it. So 404 guys lately. Again, we have the Fridays come through here. Then we have the Saturday, Sunday, and then we clear through it. And then the low we just get on, we have the Friday, the Saturday, the Sunday, the Monday clears it. So you can kind of see, I have noticed in times that in an uptrending or downtrending market, it doesn't happen as much. But when we're rotational, like in between monthly and weekly and daily levels, weekends, I don't really trade them. And I normally just come back and get the best trade that's super quick on Monday, just taking it all out. So all your weekend warriors and your retail who are cheering and aiming for stupid prices just get wrecked is what they do. And CME is normally in charge of destroying their dreams doing that. So I have a nuanced criteria. I look beyond this presentation that requires my understanding of what we are covering more from TPO to work out the probability of it running as well. So there is times where I can use more advanced things to have a better idea if it's probably not going to run all the way through it. That can just come down to open drives and opening outside of composites and stuff like that, where it in times like that it does allow allow Saturday and Sunday to stay in place and remain on side. It starts with are we rotational and choppy mid time frames? Yes. Then we can immediately assume any low volume weekends using market profile stats. I can check daily delta and volume deltas for low activity. And then I can look at a higher probability of targeting the opposite end of the weekend's value back to where Friday was. So again, some more exo stuff we can cover another lesson where I can look at Friday was, like $1 billion worth of volume. And then Saturday and Sunday's only hardly 100 million. And it's just so there's 2 million there and Friday did $1 billion. So it's not going to take much to come back through it, So you got to sort of look, whereas every now and then you might get a weekend like a Sunday that was really high volume. That's more likely to hold because come Monday's Asia session, it doesn't it could be like a bit of an equilibrium amount, the same amount of trading and volume going on. So that's where it can kind of hold the level. Low volume, remember, on trends and stuff, traditionally in early basic 101, low volumes generally fade, they fall. So we need to see the volume to sustain. We need to see on-side participants who are willing to defend their positions and that sort of thing. So now another observation as to why I wanted to become a bidder off this washed daily level. So some of you, if you did notice, I was talking about getting in off, like when we got in off that trade on Monday, taking out the weekend. Well, it was actually Saturday that hit the daily level, the fresh daily level. Starting to look at this stuff, it's a bit of a test. It's just an observation that Saturday being so low volume, it kept the level fresh, it kept it naked, and Monday was the true tap. And CME don't trade these 2 days. So CME never touched the level, right? So maybe you can confer if you have a nearby level and you're hitting something on a weekend, check that if CME did hit it, open Monday, it could continue. But if it didn't hit it, maybe CME. So I'm just going to jump through so we don't take up too much time. You can read this in your own time, but you get a little bit of an idea of that theory as well. It's not 100%, guys. It's just an observation that I've come across. I'm still a student. I'm still learning. This is what I'm doing. I'm constantly observing, learning, having aha moments, light bulbs go off, and then I go and back test that stuff. To be honest, I have more forward test that stuff. So I'll be keeping an eye on that. If I see a level that we kind of close around on a Friday and we don't quite hit, I'll be checking CME chart, and that's what I'll be using the CME chart for that kind of answer without having to wait for Monday. So back to Friday, Sat, Sunday range. If we just remove our volume profile and annotate where Friday's range was, we also use the PA trading range, all the same, but we have the volume levels. The extremities of where we expect responsive selling, responsive bidding marked in red is exactly what we got. So interchangeable, simple, effective. So PA and the volume profile is already weaponry. So PA trading is fine until we have no volume or developing volume to show us where we bounce internally or externally of our PA range, leaving us firing off unwanted trades. So if we, for instance, we've got like the value area low, came in right off this low through here. So it was a double whammy. We reclaim this level. It's an SFP of this level. Then we can look for rotation higher. At this point through here, like when it was developing, it may have been here, but the point is we've marked the range off this point here. But if it fell short here, I'm not going to become a seller until the responsive bidders kick in. Responsive bidding kicks in, then I can become a seller aiming for the other side of value, all the 50%, just using price action. We can see we did a point of control. It's probably right through that 50% anyway, just because we had a bounce here and a lot of time chopping in and around it. Okay. So that is just something to something to look at. Where using volumes metrics such as responsive buying and selling can be different, and there will be times when it's developing that all of a sudden, if you have a value area high, so the VAR had migrated to here, and you're in a trade from here, take profit here, don't aim for here. Or if you want to become a short seller, maybe use this breaker and test your luck being a short seller here, because it's showing that volume has moved the value area high down lower, and the value area low could also have moved down lower. So it's just showing you that there's migration of perceived value, and we need to get into the likely supply point of how it's getting heavily weighted and pulled down, and it's leading to new acceptance at lower prices. Okay. So now I've added a fixed range profile. This allows me to draw in my own profile, not just one set to a daily limitation or a session limitation. To keep it simple, I've just actually gone from Friday open, but notice I've extended right toggled on in pink over here, and that is this under the settings. This means future price will keep this profile in a state of flux where the point of control value area high and value area low will adjust to new orders changes in the volume signature. Okay, so it's going to keep moving and adjusting. I can watch for from where POX may snap to show where majority of trading is now happening, or the value area high is lowering, and the value area high is lower, and the value area low is lowering. That's what I just explained. Or increasing, or diverging. It's getting a wider trading range or a more narrow trading range, decreasing the sideways trading range. So that's what we're discussing when I first started tonight. How we got the two intercepting anchored VWAPs are kind of intercepting now, they're converging, and that's going to create some volatility where it can snap to either side potentially. Okay, so extend right is great for watching the most recent price action and getting a narrative read within inside a stand locked in PA range. So that's where you know all the higher time frames, but you might go on the 1 hour. You're not really going to trade yet. You're not too sure, but you can use that. You can have a bit of an idea if you are sitting at your computer and you can watch it live to see whether the volume's migrating up or down, or the value area high and low is moving up and down. Okay. However, as always, the locked in daily or our own locked in profiles can give us the most solid levels to hold or reclaim. I use developing generally to monitor the volume shifts and perceived value, giving the likelihood of up, sideways, or down. And the locked in previous levels if below previous val, look to bid. If above the previous value high, look to sell. If at the previous POC, take profit, or enter if shift has happened and it's inducing one side to get trapped. Meaning like if you had a high point of control, you've got some time and space develop up here, and then you get inducement. I might look to take a trade here, back up to actually go higher. Be careful around here. You could get a failed auction and it could roll, but that's scared money don't make money, right? So that's where you're taking that risk to get stopped out. Maybe you can move to break even if you get into a really good lower time frame trade, and you can ride that up a lot higher if you have that time and space, and that point of control does exist quite high up in a premium. And that's kind of the fuck you to this range. You go, okay, yep, out we go. Deep premium becomes deep discount, and off we go. Outside break. Okay. Now, in this state of flux and knowing full well we are in a trading range, what levels would I use? Now, this is just theoretical demo, not to add monthly and weekly and LTVW, etc. over the chart to confuse you. It's simply out. It's simply out of all the 1 hour levels that actually should be looked at. There they are. So you got other 1 hour levels, right? That could be inside of here, but under the naked value area high, we have this HD level containing PA range, the old naked daily Friday. So under this VA up through here, this 1 hour breaker, we have a level. Keep moving that. We have this sort of a level through here, but we can see that this sort of value area high is now a lot lower. There was the point of control I mentioned that's right in the middle, and then we have this value area low that sits in here. So that opens up this rejection block here to potentially be a bit higher than that low because this is migrated higher. So we can look for, and this is the old example that actually we did take the trade from there. So forgot we're looking at that one. So you can see how we can become a buyer under here, we can become a seller above here. But the reason why I'm looking at this 1 hour break, and even though I know we did actually move above it, and that's because the whole thing is actually migrating and has been at the moment for the fact we hit the developing yearly value area low and we're trying to hold it. But my point is that we're looking at this two-dimensionally. Why am I not necessarily looking anymore for this highs? Because this value area low is down here. So this level here could be that type of hit the breaker and then roll back over again. You understand it? This value area low is here, and here's a 1 hour breaker right on top of it. In this case, we still came down a little bit lower. Us guys had reason to look at naked points of control and stuff. It didn't spend much time down there. There's pretty much a wick straight back up through there. Okay. So I'm just being realistic about all these levels that we were talking about. Now all I'm doing is just going, all right, here's my volume profile, and I'm only looking at buying and selling here, and then I've got my unorthodox reasons, but I might be looking at taking profits on there, and that just simplifies it. Done. Like I have my volume profile, and I'm now able to identify the levels that matter, and the other levels I can just watch, especially if I'm in a trade and I want to watch those levels get digested. So you can read through these, or we've got a fair slowly getting through it, but I want to just kind of summarize a lot of this stuff. So now let's take a step back and form our own previous ranges starting on a higher time frame. So monthly, I want to look at the run up into this range and then the breakout. I know the inefficiency will be low volume, inefficiencies being this one here and this one here because they move so quickly. Pretty much one-way trading because they left those sort of imbalances that really got balanced after. As you can see, got rebalanced after. So I know there wasn't a lot of volume in these. I mean, besides liquidations and stuff, but we know that there was more volume in these months compared to 2 months worth of trading. Okay. So I'm just I like to sort of look for this stuff. That's my flair on it. Okay. I sort of, if you're in doubt while learning, go higher time frame and draw them from sort of imbalance to imbalance. Okay. So I know, I was saying I know the inefficiency won't have a lot of volume, but we're just letting we're letting TradingView do the math, 68 to 70%. As you can see, I got 70% on here, which is what TradingView uses out of the box. TPO and stuff generally uses, or XO uses 68%. So have a play with it if you want to change it. 68 to 70, never changed to anything else. It's just silly. Should be a drop down box giving you the two options, in my opinion. And that's going to create the range for us. So I've turned off the extend right. It's important to have that turned off when we only want to take a piece of the pie. We don't want to extend it all the way over here and end up with some big ugly looking thing here. Okay. So, this is, yeah. So,
Hey, Roms.
yeah, mate.
Just a quick one. When you said imbalance to imbalance, is
Yep.
that Because that's not actually capturing like the range, is it? Like the guts of the range.
No, it's just getting
That
like it's
that's
just
because you're sort of getting the peak and the
correct.
base
So
and the
so for you, mate,
both
it's just,
impulses.
it's single print to single print. If you think about it,
Okay.
so you know your single
Okay.
prints on your TPO are just single blocks. It's
Mm.
allowing it just to be the single blocks, and it's making sure you get all the detail in between it. Does that make
Okay.
sense?
Yeah,
Hopefully it
cool.
does. It's just a way of like not including any other sort of consolidations that could interrupt the math on it. But that's my take on it. If you guys want to go play with this and you find other ways of doing it, bring it to me. But at the moment, it's
No,
working
that's
for me.
cool.
Cool. So,
Nice.
um, yeah. So the reason why I'm just looking for something like this out of everything to look at is because we had a lot of time here, and time is acceptance. Okay. So with acceptance was it accepted and moved higher. So what do we expect when it comes down here for something that accepted for so long? We expect more, right? We expect either it to do this or it needs to digest all of this to go lower. Okay, so that's what that means. So yeah, when price comes back down to larger time and volume, we expect to see deacceleration and reaction to take advantage of. Okay, so the deacceleration hypothetically should, and it has. And we're gonna move through these slides and have a look at how it all worked. So, and with this is what the result is when I let go of the click and I actually show it, and it automatically generates this, where the value area high, the point of control, the value area low. And with a quick monthly observation, we see before it broke out, we had one last tap down into the point of control before charging higher. So with this information, we can now extend it. So all I wanted to say was, remember how I said before about if we have like, a volume profile, right? For instance, and we're doing stuff in it, whatever it wants to do. But then we come back up and, say, you have a point of control through here. Sometimes it likes to accept up to here and then induce and then go. And it happens more often than you think. It's why I'm bringing it up. And that's what that little last kiss was. This monthly close is a swing file pattern, came down red, hit that point of control, and then absolutely rocketed. Okay, so I see this in a lot of time frames, but I generally need to see, wicks, wicks, wicks. Oh, a few candles, and then it'll hang on, hold the phone. But it's easier to do. Is I probably drew that point of control a bit low. You can see this one's better. Is it's sort of like if you say that's your 50% line, it's really good when it's in deep premium or it's at the deep premium level. So if it's confluent with a deep premium level of your price action and then it bounces off it, it's generally like something it likes to do, because when this had the SFP, every man and his dog was going short, right? So majority of this was just throwing gasoline on a fire when all those shorts undone, and they probably got heavy because if you think about it hypothetically, right, is if we are just ranging, we expect to be ranging until proven otherwise, then on the monthly you couldn't really tell much. On the lower time frame, you could investigate it, but the point is the shorts all just keep piling in for however long this was, because these are monthly candles. And it wasn't too bad because it's off. They did the right thing. If you're above the high, like if you're shorted above the high, like the value rate high, then it's fine. And you've got your stop and a break even, well, you're fine. But the point is, like, it hits that, and it's called inducement, and it juices everyone to go short, and then the true move takes place. So something that can happen is this is another reason why if you took a short position here, you would take profit at the point of control and it wouldn't hurt so fucking much when it goes through your stop loss. Okay, so just kind of going over this stuff over and over with you guys. I'm sure you're sick of me saying it, but I'm just going to keep pumping these reps into your head until you can just go, you start finishing my sentence. All right, so and just placing some nice titled annotations is what we always like to do. So I've added it's a bit small on on here, guys, but I have added the 2024 fixed range volume profile value high. I've put the 2024 point of control because we know what we're talking about. We're not talking about vwap right now, and the value area low. Just annotated it across, just drawn some nice little rays in from it. And then we can sort of dissect what the recent price has done to what price is currently done. So we tried to hold the point of control, pushed out and failed. Okay, so that happened in number one. Okay, so we've come down through here now. Yes, it wasn't clean, but we had a huge capitulation. We tried to close back above it. We put a monthly level in. We bounced straight off that monthly level like we've discussed earlier on. We pushed right up into this fair value gap. We've hit this old monthly breaker level to a T. Boing, rejected, falls and accepts back in here. Where do we expect this to go? We expect it to go to 4. But guess what, guys? It hasn't gone to 4. See my conundrum? So I'm not going to keep reading all this stuff. I'm going to sort of just, you can read it in your own time because you get this file. But my point is, this is why I don't love, I've got the developing yield is saying, hey man, we could shoot up here and then we could hit this old level that it just front ran a little bit. Maybe we can hit the POC and then we can roll over. Hypothetical. That's what I'd aim for if a long takes off here. I said I don't like the look of this low because the wicks, we don't have these type of wicks. This is the kind of thing of like, if you throw a ball at the ground really hard, it bounces up hard, right? Well, the ball has been more thrown at the ground like this. So you bounce like this. It's not getting the kind of bounce I want. So what would change that would be getting a capitulation into here. It doesn't have to take that out, just into here, and then reclaiming a really strong monthly. Then it's more of that ball hitting the ground and bouncing directly up. And that could be the catalyst that sends us back up to here. Or, yeah, I mean, realistically, that's probably your range low because that would be your range over the entire high. So if you get in there, we're starting to look ice cream street. But until then, it could just be a matter of getting in here and still going lower from there. And that's just from a monthly analysis that I'm doing at the moment. So that's what I'm looking at. And I don't love the fact that we have not yet hit that level. We don't have to. But the fact of the matter is we have, a bear market. Most bear markets, move sideways a little bit before up. So, do we come down right down or do we come down lower? Do we screw around in here for a bit? Then do we take off? It's probably moving a few too many months that we'd like on the monthly chart. Down, there, and then up. Something like that, like put more of an actual bottom in through here. Bear market, it's like to have a spring. I don't see it. Like I would like a spring. It's generally just where you get like one last little capitulation that's bought it really quickly and everyone's given up at that point. Our Discord's getting pretty quiet now, guys. Have you noticed that inside main chat? So we are getting to more of a tail end of a bear market. We might go through a boring phase soon. Some of you lads trading with me are doing an absolutely awesome job trading this bear market. You're killing it. They can be traded. I trade all bear markets. You just got to have this kind of skill. They're all just looking for these type of months, which you don't get skill in bull markets. You get lucky, you make a lot of money, and then you have no fucking idea where to sell or what the market's doing or how to read the market, and you give it all back. If you're one of those people, you're in the right place to learn. So this is the kind of thing that, I'll use something like this because this was monumental before we expanded again. This was the last point of choppiness. And so now I'm looking for potentially seeing the value area low. Why? Because failed auction, law 2, where did we go? Point of control. Did we get the strong bounce? No. Where are we going? Here. Okay. It doesn't have to, but it's something that's in the back of my head. And every time I think about going big on a long, I'm like, fucking hang on. That's that thing. But then I think about going short. I'm like, but hang on, we're above the developing yearly value area low and we're balancing. So we could be in for like that, like it's monthly again. It's, condense that into something really ugly. But you get my point, okay? So that's kind of what I look at looking at this kind of stuff. And that was 200 days or something from expects need some time, and it's what it's putting in at the moment. So dropping down to a daily, we can then observe the relationship it had with the long-term trading in 2024 with the current sentiment. Okay, so failed auction above this old value area high, which the failed auction is. Let me change the color so we're not conflicting. Failed auction was this one here. Cut through the point of control, straight down through there. So we didn't even get a reaction where it took off from there. So that's straight away saying we should really be going to this point through here. Value building under the point of control with naked value area low still there to tap, as I just said there. We're not actually hitting that old point of control. Do we hit here or hit here and then hit it? Maybe, because we've got the developing yearly through here, right? We're setting off at the moment. So these are the hypos I'm coming up with on the higher time frame. Just trying to get a bit of a read on it. Just doing intraday trades until one of them turns into one of these outcomes. So I always just leave a little bit on the end of my trade and either close it manually when it's not showing what I want to see, or it comes and takes me out for the last little bit. Demand is strong around that area due to old monthly levels. So there was a monthly level through the low through here, so it is quite strong, but we're finding heavy amounts of supply and it's not even hitting that old level. So we got recency we haven't added, which we're going to add soon, which is using new ranges, and they've sort of taken dominance as you'd expect. So looking at these old levels, they're solid, they're strong, but you can already see like the respect of them is, you know, it's not crazy. It's more kind of become a zone. But one thing we do know is for certain that even though that level is old, you can agree that we are within inside of this area. All right, so that's something to take out of that. So no clear shift in condition besides sweeping the val or POC for an easy rotation trade or losing them and marking up or down. Okay, so again, we lose them, we mark down, we claim them, we mark up, or we get a rejection through the point of control, or we just stay rotational inside breaks inside of it. Okay, so it's just kind of, you know, whether you need to look at these things. And if you were conservative as conservative, you would probably be at a point of being like, there's nothing to do in here because that's the main level, that's the main level, and this is all noise to somebody on the daily. Okay, if you were looking for, if you're a swing trader, guys, you're better off getting something here or getting in here than you are trying to long here and getting stopped, long here, getting stopped, long here. You're probably going to get stopped. Maybe you won't. You know what I'm saying? Like, you just need to be realistic about where price is and set your alerts and wait for them if you're a swing trader. You know, someone who's too interested in what some of us lads are doing daily with morning preps and getting amongst the chop. So as mentioned, to continually tie in these strats, here's the old monthly levels, which are not really looked at, but the FRVP really highlights them to bring them back to life. The initial range high that created the multi-month range was a monthly level that held price down multiple times after being washed. So this level through here was a monthly level at the time from back here, and it was the value area high. Okay. Then we had another, this was a breaker level, which should have held price down. It got washed, went through, but it's the point of control. Now there's a monthly level here, but you notice how I haven't really highlighted it. It's because there's no real relevance to a volume profile. And then on 3 was our last one, which we got that low in with a claim of structure, which I don't love because a claim of structure is secondary to an SFP. Okay, so when we talk about SFPs traditionally, guys, you know how you're taught a true SFP is, you know, say you've got this structure, you sweep the low and then you say SFP. When I say this, I'm talking about level SFPs. Okay, so a level SFP would be more, don't really have an example. I mean, there's your traditional SFP over here, but maybe on a 2-month chart or a 3-month chart, this is an SFP, so it's not terrible. But the fact that we closed below and then had to claim it again in itself is a little bit of weakness. You know, and we can see that, you know, we had this fresh level, breaker level through here. So we didn't really need to come back up to here. So that makes sense. But yeah, the thing is, I think that might be the front run one a little bit. But my point is, I would have felt more confident about more like upside if we got body closes at or above, ideally above this level. And this was a washed level as well at this point. So again, it's just sort of showing you how it's a little bit, how you going with this whole setup is not the strongest thing in the world. It's sort of, it's happened, it's there, but it can quite easily roll over because it's not kind of this kind of thing happening. If you had like this come down and then close back up, even red with a big long wick, then it did something here and then it went, then I'd be more confident to see these kind of prices. Okay. So let's go back to the VP isolation to keep our chart relatively clean. I've taken the levels off. We know about these monthly levels now, so I'll carry these subconsciously into the future analysis along with other trading within the fixed profile. So guys, like you can keep them on your chart. We'll have the indicator, but I do want you to do levels manually. But you can keep do house cleaning. You can use your object tree. You can put them in folders. You can keep your object tree open. You can use the little eye icon to toggle them on and off if they're messy. Just try and keep your charts as clean as you can. Otherwise, you're gonna end up getting yourself in mischief. I'm adding the recency component, what's fixed up and happened recently. So what I've done here is the opposite. Was remember how I said I went from the thin spot, like the more thinner stuff where it moved quickly up to here, and you can see it's quite thin through here too, until it got up to obviously where they slowed down. So I'm using the two thin stuff. Well, I've done the same here. I've just gone off this point through here, failed to get back above it anyway. And then I've gone to this point down here. So it's sort of like down, down. I mean, you could probably put on that one too. You could have a little bit of a play and see how it looks. I mean, I might do that after as well. This is what I'm saying. Have a play around. See if it's respecting levels. It's not respecting levels. One might fit better than the other. The one that fits better is what probably more eyes are looking at. So it's probably like the more reliable one, because this is all astrology for men, remember? So it's pretty much a self-fulfilling prophecy. So we just make this shit up, and we all bid it, like we're all on the same page. We bid with smart money, essentially. We want to bid with the institute. So I've just gone between these two for this example, and it's sort of marked in this area through here. So adding this in, we look for what is relevant, and we can see last month we tried to get a close back within the recent VA, however, got rejected from the recent point of control, which took primary over the old point of control. Okay, so what this spewed out with, and again, I don't have extend right turned on, is we have this value area low that we went able to get through, and we tapped the latest point of control, all the volumes at the low, and that's what we're working. We're trying to chew through a lot of this sort of area at the moment to get back up. Or down in here, we've got our own version of that we're trying to chew through at the moment. But you can see that the recency point of control did reject, and this one didn't. So it's questionable. Maybe didn't really need to hit that one. Maybe it was fine hitting that one. And this is the recency side of it as well. But we failed to get back inside of that. So step one is it needs to now compress to climb back inside of it, and then it can work its way into these levels, chew through that. Might be in between these two a bit of chop, and then it can move up through there. But until then, we need to just accept the fact that responsive bidding is going to be, in one hand, we're responsive, but in the other hand, we are still rotational. And because of that, even though we're recency wise, we're sort of down and we're down and we're trying to get above it, we aren't fully capitulation mode until we build value under here, because we are rotational here. And this is what I sort of mentioned a few times earlier on. When on a low time frame, just be careful of your targets, because there could be a higher time frame point of control or value area low that you're unaware of. So in this case, good exercise to start on your monthly, your weekly, your daily, and try and digest the bigger, higher volume profiles and make sure, A, they're better to trade from. But B, are they going to be in the way of looking at a 30-minute volume profile that's spanned out over the last few days, and you're just like, oh, that's a good target, but little do you know, you don't have a point of control in there that's ready to suppress your idea. So again, we'll just shoot through some of these. So dropping to the daily, we can see where we lose the old range and now struggling to reclaim with a low point of control and value area low acting as the barrier to entry. So here we have the point of control, just zoomed in a little bit on it. We have the point of control, the value area low, failed off it, failed off the value area low. So it's an outside break, rotates lower, front run this level here, which we're in orbit, which I still don't love. Then we've tried again, failed off the point of control again, put a bit of a double top in there at the moment, which in itself is a draw on liquidity. So that's where we could come up, maybe just reject here, then, or even higher. Maybe, there's a FEG there. So probably wick into here, and then we have some sort of an AMD where it finally rolls down to there. So I'm just running hypotheticals again, but that's sort of what I'm looking at. And I need just to assume while we're rotational in the old 200 odd day VA that's what we're doing. And I'm using recency to navigate my way around more recent sort of price action from that point. What else have I said here? So yeah, so we can see movement toward, okay, so I'll just read it. If we get acceptance back above the red line and ideally hold on above the 2004 POC mark, we can see higher movement. So again, what I'll be looking for is, I gave the AMD idea, but let's say we come in here and we work around in here for a while, and then we can move towards this point here, okay? Otherwise, if we reject this point through here, we could definitely see ourselves cascading down to this point down through here. Trades from this point here could become swing trades and would become the better trade than anything inside of here to aim for this level, or higher, because we've got that hitting the ball on the ground hard, we bounce hard, rather than this kind of pissy and then it rolls over kind of thing. Okay, so just a couple of things to think about. Intraday trades may turn to swings. So yeah, it's like we at the moment, like what I'm doing anyway is like I'll do, like, let's say I get in off like the low down here, and then if I had like a long on, then if there's this breaker level, I've already probably taken 50% of it off. And then if it does move higher into this next level, I'll take maybe another 50% or 33%, probably 33% off that, off the remaining margin I've got on. And then I'll have my stop to break even. And if it did do this kind of thing, then this will engulf, the last percentage will engulf how much I made in here. But if it does just roll back over to my break even, I've made something and haven't wasted the whole expedition by getting out. So that's sort of how I treat noise trading, with potential of movement, always leaving some on to come out at a break even. And that's how I've always in the back of my mind got a trump card to have some kind of money in case I wake up to see the reverse of this happen and it's up here. And I'm like, thank fuck I left a little bit on, because I'm staring at still a nice amount. And I've worked my psychology to not go, why didn't I just leave 100% on? Because trust me, I've tried that too. And you end up with no account, because you just keep getting stopped out 50 times. So having something on is better than nothing, and it's just something you've got to learn. Remember, compounding your gains will give you bigger position size. So every little gain counts. So adding the high time frame strat, I've gone and isolated the weekly and daily levels below, ready for activation. We have a daily naked perfectly on the old value area low. Okay, so again, this is what I was talking about. I was value area low down through here. Which one was that from? It's kind of confusing, but anyway, we've got this daily level through here, and that's confluent with that level too, right? And here's your local value area low. So I'd be looking for any reaction off here to take, because now we've got a PA which is just pulled out of nowhere. There's a daily one here too. There's a daily here one too. There's a daily one here and here. Why that one? Because it's confluent. Okay. So that's why I did that, And if it does fail, and I might punt that one, I'll be careful here. If it reclaims that, then the weekly was the entry. Okay. So we're just sort of like looking at these levels each time, as I said, and we're trying to cherry pick the ones that are confluent with the point where people are going to step in and start bidding from. So this is a quick note. It's about rejection blocks. Okay, you learn them. So the PD array stuff that we actually learn in the course. Why do they work? Because the closer to the wick end, the easier invalidation. Okay, so that means that if price, when it's red, say you've got, at the time, it bounced right off this rejection block, which was the monthly level. But the closer that we get to moving, so let's say when this candle was moving down, this was a rejection block in here, and it moved down onto this 50% level, the size increases on everyone's using good risk management, and that smart money is, as it moves closer to that being the invalidation point, their position sizes are increasing because their invalidation's closer. And that's why rejection blocks generally are the big heavy hitters, is because it's that final moment. If you watch AGA or anything like that, sometimes you'll see those kind of pesky lows that go in and they go right down to like here, and then they do that. And you see the tape just go crazy with large size because they immediately have a stop loss here. So they're able to risk large size with a quick rip the band-aid off invalidation. But because so many people do it inside of the rejection block, the thing just rides up. So without reading all of that, I'll sort of explain how probably a lot of stuff about different things, but it's getting on and I just want to get through it. So that's why your rejection blocks generally hold price up and reject price from those points too. So just with identifying our monthly, weekly, and daily levels, our old FRVP, our recent FRVP, I've given myself place to look for decent large moving trades, responsive bidders around the old 2024 volume profile val, which is confluent with a daily level to activate and execute under. Okay, so again, like we have that level that this is the one that's directly underneath the new monthly level. So this is if we actually sweep the low. And there's a daily level from left that comes out from underneath that. So that would be goes under there, spend some time under the monthly, and then actually would be looking to trade under that daily level that's confluent with that value area low. And then there's a weekly level lower as well than that, which is moves further down in the wick. So say this fails here or doesn't even claim it and it rolls down through here. This is all noise to me. I don't care. And I'll wait to come and buy under that weekly level. And if that reclaims, then I'll be looking at a take profit here in case we are just going to 3 drive or keep moving down. And then from there, I could look at a take profit here as well. Or if I'm watching live, I can just monitor it and I'll have my stop. If I get in this low, I've probably got a good break even stop anyway. So I still probably would be just taking a little bit off here just to be smart. But if I get above there, then we've got that more straight down grabbing liquidity and we can move back up towards this point. If we don't get this, and if none of these intradays turn into a swing, then I'm looking for these old points of control. I'm looking for some time and space above it. And then I can look at buying here and this becoming a liquidity vacuum where it pulls me straight up very quickly in there as well. If that gives me that opportunity. So that's a couple of areas I'm looking at. So advice when starting out with this strategy, keep it high time frame, keep it clean, looking for only daily levels to be swept and a condition such as a val or a POC or a value high to be there to take the trade. Won't always happen, don't always need it, but I'm giving you guys like the trades that happen far less often, but when you are trading at them, you're going to generally, be on the right side of the trade. It won't give you a trade every day. You may wait weeks for setups, large pools. So like I said, you wait for a monthly and a level and the one that's all the way at the bottom. You could be waiting for a long, long time. But you'll easily be getting 3-yard trades, even if you're not doing all the order flow stuff with just the bounce. Even if it's wrong, it's like a contrarian trade. It's like it's going to make the lower high, and you're getting it on the lower low. So even if you are going long, you're probably going to have enough time to go and make yourself a coffee and come back and maybe even spend a few more days or weeks with it going in your direction. And you can adjust your stop losses and take some profit off it and that sort of thing. Really, really easy, really slow moving. Not like the 5 minutes that's you get in and half hour later you're taken out and you've lost money on. But yeah, get proficient and have a good narrative read as well. So don't just treat this like, right, he's told me where to execute. Like I said earlier on, stop just trying to get good at entries. I want you guys to use this like I have to read the market. Use the volume profile to read it, the levels to read the market. Have an understanding of if it goes to here, this is what I'm planning. If it goes to here, this is what I'm planning. This is interesting because A, this is interesting because B, have the aha moments, have the, okay, hang on, that's telling me one way, that's telling me the other. What does that mean? Don't trade or intraday trade for me. I'm just going to stay intraday trading. For yourself, if you're a swing trader, you need to wait for something clear to happen. You need to see either a shift of condition or something really, really obvious like, okay, so it was going to go down. I didn't get a short down or whatever, but I stayed on the side. It went down. Now it swept that level. And now I'm 80% leaning towards it going back up. 80%. There you go. Take it. Because that's probably going to be the moment you have that, fuck yeah, it's actually finally working for me. So you'll be able to read midterm timeframes like a book due to mixing locked in and developing ranges in flux with higher timeframe levels. Currently in this P, like we discussed earlier, I expect it to remain this way. A breakup can push higher as all good trends stack P. Getting acceptance under P means heaps of offside positions can add supply, pushing us back below range val towards weekly, monthly levels. This is how I manage my intraday trading with my extra knowledge beyond the presentation to build up the narratives, thesis, executable hypotheticals within realistic boundaries. Not expecting a random P val to take me to Valhalla, but more like to the P POC or the value area high. So who actually knows? So that's why we have the P. We have this value area low coming through here. This is why I said, guys, bid here. All right, ignore the weekend. We'll bid there, and off it went. Okay, rotation back through, some profit taken, at the highs, at the P-shaped POC. When I was doing these slides, up here as well, we went above this range. Then I put another little value area in here, going off that low to where it dropped out here. And inside of that one there, I could see that we came back up. We didn't even hit the point of control. So when we came back up this time, we had this high supply level through here. It rejected for a short position. From there, the same deal with this one here. An initial retest could have gone, take profit here, comes back up. If you took a short there, not so worried. It didn't quite take the high on Coinbase. May have taken you out on a perp. Rolls back down again. We front run this level. Now this was developing, so the value area high may have been higher at the time. I'm not too sure, but I'm just going off this. So in that case, you had a wash level, probably would have missed a trade from there, being real here. Again, we have this previous week open and a daily level. Good trade to take. Right there, showing weakness, didn't hit the value area high, but nonetheless, this is where it's close enough to it. At least by the time we closed down through here, Liam got that one. He killed that one. He took it all the way down. So props to him for that trade. This is how, we've got other people that are actually being able to do this stuff. But at the moment, because we're in this P, I'm just expecting this to remain rotational until we get a shift of condition of some sort. Now, we tried to get a shift of condition here. We really did. But as soon as you see that, that's a failed auction. And that means here and here are trying to mitigate this volume. And the same deal, when we come back up, we either get another failed auction and do it again. We reject immediately, or we finally get the test and push. Or we lose the P-shaped profile. All of this volume becomes heavy as fuck. This is just a toothpick. We snap the toothpick and we go straight down below the value area low. And I've drawn another deviation. So the failed auction up here I drew, failed auction down here I drew. So we got a weekly level, comes around in this FVG, point of control around here. So, it could be a level through here, but we have previous month, I think quarterly open and a daily level down through here around the rejection block, coming in off that sort of little node down there. So as a betting man, I'd prefer here. But having said that, depending on the momentum, maybe we can just throw the whole idea away, because why? We know even lower we had that 2024 value area low. So maybe this will be the traditional swing file pattern. So could take a bounce, see how I go, treat it like an intraday trade. If I get stopped out, then I wait for something like that. And if we're down here, you can bet your ass we're going to be analyzing to the left, trying to find old naked monthly, weekly, daily levels that are confluent sort of within the vicinity of that value area low and all those wicks, to look to be able to take an advantage of a lower time frame entry. Okay. So a member of ours, Mikazwa, has been developing this automated level system with my consultation on nuance that you're staring at. It's getting there, but we're building out the final touches such as wash, breakout, naked, etc. color or line conditions for the trader to be able to qualify the level across all time frames. So these will be able to appear on the time frames that are relevant to you. When they go through, they'll get washed either a different color, or they'll change to dots or dashes or something like that. So it'll all be automated, so you can sit on one time frame and it'll just do it for you. We're just sort of working out exactly how we want it to work. It also gives relevance to the current high time frame opens and previous levels to help gauge the higher time frame. So we've got the monthly open, weekly open, previous weekly, Monday high, Monday low, etc. Nothing new, but just something that's the Monday strategy. That are we above previous week? Are we rotational on the weekly? Are we below the previous week? Just things like that without having to go to the weekly constantly. As you're trading through the day, you're probably going to not want to keep jumping out for the weekly, or sometimes you will just forget to mark these sort of levels. So those levels are definitely solid, just to go, You know, it could be a daily level, but there's a previous monthly level or a previous week open on that monthly level. So we now turbocharge that daily level, you know, amongst other levels. And that actually happened in here. It was a previous week daily and rejected off it and then rolled down. And yeah, I think that may have been the one Liam took actually off there. That one or the other one. I've got his. I've got a screen up for that anyway. So it also gives relevance to the current high time frame. So yeah, like strength, like we can gauge the strength, the weakness of those ones I've just discussed. However, even though this thing kind of exists, I want you to be 100% efficient at managing a chart for weeks yourself without having any automation. So this thing will just become another thing you ignore. I get lazy myself and I don't love these things. I like them, like the manual version during your weekly prep. You should really still be doing it all manually so you're aware of it. And this thing won't let you read the narrative. It's just going to throw it in there and you're going to be as good as going to the lower time frames and trading between levels, but you're not going to really have any sort of idea of what formed the level and what interacted with that level. So it's great, but I still find myself 50-50 with it. I have it like on some charts, another chart generally that I have over here. I've broken up into 4 windows and I sort of just look at it to almost cue me to go, hang on, what's that level? I should add that to my chart. And then I sort of investigate it across all time frames. So I still think doing things manually is going to give you a narrative and it's going to give you a read. It's the difference of driving an automatic car where you just, you know, brake, accelerate, or it's a manual car, you fuel the motor, you can change the gears, you can make it perform, and you've got more control over the vehicle and the engine. So it's up to you. But for me personally, I like to be a little bit more hands-on with it. So great indicator. I think it'd be really good just to throw up and, you know, as a prompt, but I'd still recommend turning it off when doing your preps and stuff and going through and adding the levels yourself. And then you can maybe just throw it on over the top and go, hang on, have I missed any? And you go, well, shit, I missed that one. So it could actually be, could be good. Make sure you use it for good. Don't damage yourself with it. So we're getting there. What time is it? Yeah. Okay. It's been a long session. We're nearly done. So let's get through this. Anchored volume weighted average price. Okay. So the simplest and cleanest way to use the anchored VWAP is not use any multiplier bands, but simply use the actual VWAP as a dynamic trend line. Okay, so here's my settings. I don't have any multipliers on. The multipliers are just like the LTVW, the fat bands, the standard deviation 1 and 2 that creates the band off the line. We're just using the VWAP with this. You know, I personally find PA trend lines and PA-based lagging indicators to be a little two-dimensional and even ambiguous from the way people draw them to exchanges having different price points. So obviously if you draw a trend line, 3 touches creates a trend line, but if you're using different exchanges and it's over several years, then all of a sudden that trend line can be out by thousands of dollars. So I just think it's stupid, to be honest. Volume does not lie, although we can agree aggregated will always be better for a more average to look at. And that's why the LTVW is aggregated across large exchanges. So we get an average of where that level actually is, not just isolated to the exchange you're looking at. But I use Coinbase. It's less ambiguous dynamic level to look. So that's why I treat these like trend lines and in the state of, are we imbalanced up or imbalanced down on it? That's all I'm doing. So this blue line here, imbalanced down. This line through here, we're imbalanced up. So what does that mean? Rotational between the two. That's pretty much it. So imbalanced up, imbalanced down. In this example, I have a VWAP from the weekly open of the all-time high 2025, which is this weekly. I said open, but yeah, I have. What I do is I find the highest closing body on the time frame I'm using, and I go off that one. Okay, so I just because if I click on this red candle, it's going to pin it off the bottom of this. So just find the highest closing candle. It's probably what I should have written in there. And then I've done one off the absolute cycle low. And so this is just on the weekly time frame. And now we have a tap and we are holding a little bit far off here, giving us some space to move back up into it, but also a reflection of how heavy the sellers have been, versus how strong the buyers were when we were really far away from it. So we've come back down now, and that's another reason why we're getting this and this value area low that comes through here. Maybe a little sweep reclaim through it with that level that we've got through here to push us back up towards this level. Okay. So yeah, expectation until a shift of condition grabs my attention. So it's all expected. I just expect it to remain in between here and here. However, if I see it go under and do that, and it starts falling down, then that's a shift of condition. Likewise, if I see it come up and do this and start pushing up, then that's a shift of condition. So just different ways to see shifts of condition. But again, not tradable. These are gauges. Are we balanced, rotational? That's pretty much it. Imbalanced, balanced, or rotational. So the blue line is anchored off the 2022 Valeria low, and we can see that we had a nice little tap off it, and that's pretty much put the low in for now. So it sort of makes sense on a volume point of view as to why we bounced as well. And we're imbalanced up off it. So we've remained imbalanced up off that level. Nothing too crazy. Don't need to be too scared. But we've definitely tapped it. So we're expecting this kind of a reaction. The green line is the lower high that went in. We started watching and saw we were imbalanced down. So we were coming in, we're imbalanced down. We got a shift of condition. And now we balanced up off the green line. Okay. And then the orange line is recency again. So I've just gone off the latest high up here. So we've got this latest high. And we're rejecting it each time. So we are imbalanced down off that point. Okay. So green is the demand point and orange is the supply point. And blue is our high time from equilibrium, where we expect swing type positions from, or losing it means potentially accelerating to the downside. So swing type position, losing it, acceleration to the downside. Don't want to see us lose this line. Why? It's a P-shaped profile. Valeria low comes in here. Same shit. Different way of viewing it. Lose it, we roll down. Okay. And that's why we're kind of held up at the moment. We want to see either this sort of flag out and push up, or we lose it and we come back down for another test down into these lows down in here, or lower. Okay. Where are we? So essentially, this is how I use a vwaps. Nothing too crazy developing, so they are not actionable by themselves. They just tell us what the expectation is, and we go with the expectation until we are proven wrong, and then we can look for shifts of condition beyond what we are seeing. Watching this consistently helps us remain more realistic about our decisions in the market, but can also show where 2 points such as a green and orange line converge, and a potential squeeze can pop price in a certain direction. So in this case, if we see one happen, at 2, we might see a run higher. So what I'm saying there is we saw this happen, and then it went up, and then we see this happen, we go up. But for now, we need to expect down, but we need to expect up from here. They converge together, and boom, either way. Squeeze, Bollinger Band traders, you know that too. Bollinger Bands get really, really tight, and then they snap one way or the other as it's getting very, very, very heavy. And then, of course, we know as well, we have a bunch of our points of control currently that are running pretty much through like that level there. So you can see how it's all converging. I think I had another level on next. Yep. And then I just added another pivot from the low, which made it even tighter. Okay. And the way that we could have read this was we lost this level through here, which is the orange level. We held the green with a deviation, but now we're being rejected here. So once again, we're getting tighter and tighter in this point, and we either get this or we potentially get this and lose that value area low and mark down. So again, just a cool way to sort of watch how things start squeezing in tighter and tighter. With this, we now have our levels, our VP boundaries overall, and our anchored VWAPs of relevance. We can see we are at the point of control, which has both orange, local, anchored VWAPs coming together. Point of control is most of the volumes of the point of control, sort of around the center of that. Can see how we're using the AVWAPs, the dynamic line in the sand. We need to get time and space above the range value area high. Point of control will be a turbulent point, as it has been today. And losing this orange and green anchor VWAP can send us back below the value area low, which high time frame levels doesn't come in around the lower part of the high time frame wick. So this is a high time frame wick in here, and that this could send us, as I was saying, so you got like a wick in here on the higher time frame. Here's your value area low, just looking at all of this, and we could be sent back down into there. If we lose these levels, we hold this point of control. Remember, we can wash around these points of control. You can see how we can bounce off them. We can spend a bit of time sort of washing around them. We spend a bit of time washing around it, and we do reclaim here. Then we can see ourselves getting back up to this point here, where these failed auctions have been. So failed auction, rejection, failed auction. We can either, we'd be taking some profit here in case this is it, and it does sort of do this sort of failed breakout, as you see, where everyone starts, it builds a lot of liquidity because everyone expects this sort of breakout and then it drops. or we do have the strength to actually push up higher. So these are the kind of things that scenarios we're looking at, but at the moment, not an easy place to be taking trades. Random pointer control is all you need to know, but it is getting quite condensed and squeezed in. So again, your better trades is where things loosen up a lot. So further down here or further up in above your value area high and your value area low, essentially. So now brace for the messy chart. This is the most messy one you're going to see. This is the high time frame levels, the volume main local range, volume profile, the main one, the AVWAPs, and the long-term VWAP in all 4 windows. Highly don't recommend you do this. Like, get some big screens and split all these up, or worst case scenario, just like toggle them on and off, and just find something that's a little bit cleaner. But at the same time, now you can start using, you know, we're trying to find balance in the developing yearly. You know, the point of control is a bit high. We're also around this value area low on the quarterly, which could get a retest, and if it does, going to retest around the green and orange again for another bounce back up. So that is possible. And it's sort of no harm, no foul, because we're still inside these AVWAPs. We're still above that value area. We're still magnetic to the point of control. Same deal. That's the previous quarterly val. I think we also see this is how messy it is. I can barely read the thing. I mean, there's like weekly open. There's a previous month VWAP there. So again, just chop city all through here. And then we bring that down further. It comes back down to, you know, we've got a 4-hour level in there, a daily level in there. There's your orange mark. There's a previous weekly val that really wants to fill in some of this efficiency and then go again. This is why intraday trading is pretty good at the moment, but for anyone else trying to get a position, highly recommend you to step aside and wait to see a clear shift of condition. And I've pretty much marked out what I was sort of saying, and maybe to more extent that I actually had my screen up and I could analyze it. But you guys can read that to get a bit of an idea. You've done the LTVW, so you should be pretty all over that. And now we're just adding these levels. It's a mess. Break it all up or layer it so you can turn it on and off and get a bit of an idea. But this is how you can really pull all this together and become weaponry at narrating the market, knowing when to enter, when not to enter, etc. So final notes, breaking all of this up. If you don't have the luxury of having, you know, 120 inches of monitor, or you don't want to, which is fair enough too, if you want to use it on a laptop or something. If you do just want to sort of keep this all in-house in TradingView, maybe on like a couple of tabs or one tab, you know, if you're not coin trader, you might want to have Bitcoin and some of your altcoins. Remember, you can use the, over here, click for you to see it up in this top right-hand corner. You can use the object tree. Oh, sorry, wrong one. This one up here. You can click on that. And inside of here, I mean, I don't actually have a lot of drawings on here, but you can make folders in here, right? So I wanted the anchored VWAPs together. I can grab them all, right click, go create group. And I can say that these are my AVWAPs. Okay. Then from there I go, I'm sick of looking at you. Turn them off. So you can do that with all your drawings and have a clean chart and go, what's the AVWAPs again? And you can look at it and go, let's put it all on, and then slowly, you know, take them all off. Things are just taking forever to load on here at the moment for some reason. But you get the idea. So you can come on there and yeah, you can add your indicators, add your drawings, add your levels, make monthly, weekly, daily levels, AVWAPs, volume profiles, your high time frame ones, you know, low time frame ones. You can color code them as well. I've done things where I've got like normal dark ones, blue ones, orange ones, just for segregating them and breaking them up. Use orange sort of around the 4-hour mark, 1-hour mark. I use blue ones for the really high time frames. I just had grey, I think, just for this example, for the daily. Just my daily ones I never really use anymore because I prefer to have control over them. But that's just a bit of a tip anyway for those who don't have the screen real estate and you don't want a chart looking like this, because it's going to do you more harm than good with that. So final note, shout out to members who are all turning up and working their arse off to understand this. You guys all have the same access to the sessions information. You just need determination and undivided attention to the markets. So special shout out this week's to Liam. So I woke up to his analysis and expectations, everything taught in the presentation, even before he took this trade. I won't go through the whole chart, but he's committed to the trade from knowing the high time frame level, the confluent, the breaker, the AVWAPs, the reasoning behind VAs, all the stuff, even exo charts, TPO, etc. And I watched him take this trade. I was a bit occupied, so it was out of my rules to take it, but he mentioned this is what he's looking for, took the trade and absolutely nailed it. So nice work, man. It's good to see good to see all the hard work paying off. So, guys, that pretty much will do. Does anyone have any questions or anything you want to go over? Just for a little bit longer. Everyone's a bit quiet. Zaki's giving me the in the dark. Yeah, all good. Awesome, guys. Well, we a lot of us try and jump on when we can in the morning into the on the Discord. We just jump into the hangout in the morning. So, you know, the lessons don't have to stop there. Obviously, these ones, I wanted to have a little bit of screen time. To be honest, a bit tired. I think we're all a bit tired. I wanted to get that out. You're going to have a PDF document on that. You can pick my brain with it. But if some of you guys, you know, it's there for you if you're available in the morning, or some fellas do the New York session, or if you just jump on through the day, jump in there. If I'm about or just podding about on the computer anyway and making some little trades and stuff, I can jump in there and we can go over more of these things, and you know, you can have a little bit of a chat and we can all help out and that sort of thing. So that is there as a part of the service as well, guys. But yeah, we can just see that this market at the moment is having a little bit of a hard time. Hey, where's those? But anyway, fellas and lady, I think so, still on. Yeah, sweet. We'll pack it up there if we don't have any more questions to ask, and I'll let you guys get back to trading or going to bed or whatever it is. But thanks for all of you jumping on. And yeah, can see you in the next one.
Chris. Thank you, Roy.
No worries, guys. Too easy.
Thanks, mate.
Thanks, mate. That was
Thanks.
awesome.
Awesome.
There's a lot coming.
There's a lot. I know. Rewatch it. I'll give you guys the PDF. It's and you'll get there. Stick to it. Catch you guys.
Thanks, mate.
See ya.